Hello and welcome. This is day 3 of the Afro FinTech Festival. We're so glad to be here. This is the Nairobi online edition. We've been here for the last 2 days as part of the global Singapore FinTech Festival. And just to remind you, our theme here at the Nairobi online city edition is people and talent, harnessing collaboration in pursuit of resilience and growth post-COVID-19. We've had some great 2 days here, but let me just give you a quick recap of day 2, which was yesterday. We focused on the fintech ecosystem. We heard from various startups and talked about their journeys, their challenges, and how they were able to overcome them, and more importantly, the solutions that they were seeking to provide with their applications and startups that they have built. We also sought to understand the legal and regulatory framework in which the fintechs and their startups are operating, and understanding about change within and outside the organizations and how that enables movement, growth and development in this sector. And most importantly, we also focused on education of the general population to enable them properly utilize these applications that are being put in place, financial literacy, and also literacy amongst those who are getting into the fintech space. What do they know about it? How well have they done their homework? And just beyond innovation, it wasn't just about innovation for innovation's sake, but making sure that we are solving real problems. We also then heard about the financial and the foundational digital infrastructure, and we heard from the Chief FinTech Officer at the Monetary Authority of Singapore, that's Sopnendu Mohanty, who set the stage for that conversation by talking about the building blocks of the foundational infrastructure, gave us some examples of what's working and what we can plug into and adapt in our various local settings. So it was a great day yesterday, and we will be talking about sustainable financing today, looking ahead. But first, here's a video of how it all went yesterday.
I'm looking forward to also getting that inspiration from the CEO of Safaricom.
It's a pleasure to join you all for the Singapore FinTech Festival, a one of its kind globally. Indeed, we can achieve much more when we come together as a network of trusted global partners.
Now today, like we said, we're talking about fintechs, and throughout the day you're going to hear their stories, you're going to hear their challenges, you're going to hear the position of regulators, of financiers, and of course the importance of collaboration and the impact that fintechs have.
Renee Member is a fintech enthusiast with passion in building solutions that tackle daily pain points in Africa.
This is why I'm presenting to you MobiVoucher, an e-voucher platform that seamlessly distributes aid tokens to beneficiaries via text messages.
And this next session is moderated by Kennedy Comp.
But I do agree with Cynthia that for instance, the central bank here in Kenya does offer a very allowing environment for you to be able to create something new.
Today, what I'd like to talk about is how the transformation is happening within the banking industry.
Over to you.
Thanks, Miguel. And finally, we get to the part of the conversation where we bring in the tech.
Our understanding of how to protect the data we hold, how to move that data around, I think is an area that we need to pay more attention to.
Ladies and gentlemen, the Chief FinTech Officer at the Monetary Authority of Singapore now, Mr. Sopnendu Mohanty.
And Kenya in particular has been a shining example in to all of us globally to show how we can live from challenges, constraint, and get into the digital economy faster and transform the economy and the ecosystem.
I've enjoyed myself today.
I have as well, and it was good having you with me as well. And it was good having you too. And today promises to be even more exciting and more informative and more insightful as well. So that was yesterday. Today we're looking ahead post-COVID-19. What does that situation look like, particularly with issues like financial inclusion? We'll be taking a look at what that means, how to make that happen a lot more. We'll also be taking a look at areas of green financing, impact investment, as well as the responsible digital leadership and governance. Some great conversations we're going to be having today. We'll also be hearing from the Governor of the Central Bank of Kenya. Kenya. That's Dr. Patrick Njoroge. All of that in a moment. And remember, if you're also looking for updates, highlights, outtakes, please follow us on Twitter at Afro-Asia FinTech. That is a Twitter handle. We're posting all of the latest updates regarding our time here today. So please do look out for that. So one of the things we want to begin by understanding today is the areas of impact investment. What are some of those areas of focus? And we're going to be hearing from one of our platinum partners, that's KCB Bank, here in a moment. And I want to hear from the man who's captaining the largest indigenous bank in the East African region with assets of over $9 billion. With a presence in all the 6 East African countries, that's Kenya, Tanzania, South Sudan, Uganda, Rwanda, and Burundi, and also with a representative office in Ethiopia. The bank that serves over 28 million customers. Ladies and gentlemen, to now talk about the priority areas of impact investment is Joshua Oigara, who is the CEO of the KCB Group.
Good afternoon, ladies and gentlemen. I am humbled to be part of this great conversation that is seeking solutions for the pressing societal problems we face through financial technology. This will go a long way in promoting a sustainable future. As a way of introduction, KCB Group is East Africa's biggest bank with a presence in Kenya, Tanzania, South Sudan, Rwanda, Uganda, Burundi, and a rep office in Ethiopia. For the over 20 years, we have been at the forefront of driving the region's economic agenda. From a business perspective, our focus has always been driving business goals with a view of changing the lives of communities. This has more importantly been made possible by fintech, a subject that is close to our hearts. For the past 3 years, we have made significant investments in technology channeled towards the development and implementation of our fintech platform, Fuma. Ladies and gentlemen, technology has had a huge impact on the communities globally. By supporting the financial inclusion agenda with the ongoing COVID-19 pandemic, technology has come in to keep this agenda going, despite the disruptions in the way of life. Allow me to share a few insights into the bank's playing in rolling out initiatives with social impact, especially on sustainability and green finance, in line with our conviction that business is no longer just about profits, but about driving initiatives which will uplift the lives of communities. First, KCB has embedded an environmental agenda to its strategy to address concerns of climate change and negative impacts arising from business operations. We recognize that we impact the natural environment directly in our operations and indirectly through the activities of our stakeholders, such as customers, suppliers, and staff, among others. Secondly, we've rolled out various initiatives to promote environmental sustainability through internal engagements and external partnerships and communities. In 2019, KCB Group joined 28 other global banks in developing and signing the United Nations Environmental Programme Finance Initiative, which is UNEP 5, 6 principles of responsible banking. The principles set the global standard on what it means to be a responsible bank and will ensure that banks create value for both their shareholders and society. In addition, the bank has also put in place several frameworks, including the KCB Green Agenda, Social and Environment Management System, SEMS, while adopting 9 Sustainable Development Goals, the SDGs. Thirdly, KCB remains focused on developing our support to the SME sector, noting that they are the cog on which Kenyan economy runs. This year, KCB received an approval for $150 million from the IFC and as the lead syndicator to support the growth of the bank's sustainable climate finance portfolio and scale up lending to micro, small and medium enterprises and women-owned businesses. Lastly, in yet another milestone in the push for sustainable finance, KCB Bank Kenya was last week accredited by the Green Climate Fund, paving way for the bank to receive funds from the Green Climate Fund accreditation for own lending to beneficial institutions involved in climate change projects. In Kenya, GCF is a global fund created to support the efforts of developing countries to respond to the challenge of climate change and to help reduce their greenhouse gas emissions. We were accredited under the medium to large private sector category, therefore capable of fronting projects of between $50 million to $250 million. As I conclude, the COVID-19 pandemic and resulting containment measures caused an economic contraction. Among the many adverse effects in the global economy, the crisis is posed a deep threat to financial inclusion efforts globally. To support customers in dealing with these economic impacts, this pandemic has had, banks have stepped in to restructure loans for customers. At KCB, we restructured loans worth 1.05 billion. Banks continue to encourage use of cashless and contactless modes of payment to reduce the risk of the virus spread, thus creating new opportunities for potential adoption of digital finance. Allow me to thank the Central Bank of Kenya, Governor Dr. Patrick Njoroge, for facilitating this festival to drive the conversations we are having today. I urge us to put in deliberate efforts in adopting technology to harness the potential that the nations hold. Thank you.
Thank you, Joshua Oigara, who's the Group CEO and Managing Director of KCB Group, with presence across East Africa nations. And we thank you as well as our other platinum partners as Huawei and Safaricom. And many thanks as well to our gold partner, Standard Chartered Bank. And thanks as well to the organizer for this Central Bank of Kenya, working together with the Monetary Authority of Singapore in making the Nairobi Online City event a part of the Singapore FinTech Festival 2020. Indeed, it's been a year like no other, and here we are just still continuing to meet and discuss some of the issues that are affecting us when it comes to economic recovery, when it comes to moving forward, and the disruption that was already caused by the fintechs, as well as moving forward towards sustainable financing. And there were some important things that Joshua Oigara talked about in that session there, talking about sustainability and reiterating the commitment to the Sustainable Development Goals. Remember, we're just getting into the decade of action, that is the last 10 years, towards that goal that we set ourselves for, that is 2030, and to achieving the Sustainable Development Goals. Of course, no doubt, many companies now thinking of economic recovery and focusing as well on just survival mode, but also reminding us that sustainability and resilience are actually key at this point in time, even as we're trying to recover and just basically keep the businesses alive. And this is something that even the SMEs must continue to take a look at and to focus on. Many of those commitments in the SDGs are actually helpful in great times of disruption and crisis, such as the one we are facing here right now. So let's thank our platinum partners and our gold partners one more time here at the Nairobi Online City event.
Go Ahead is believing to make each day a brighter day. It is showing everyone that we can all be heroes. It's those small acts that go a long way. Go Ahead is our determination to rise. Going Ahead is our courage to do something new. It is our faith to start all over again. Go Ahead is never giving up in the face of adversity. It means growing our own. It is making the most of what we have. Going Ahead is us changing our communities. It is supporting each other where we can. To go ahead. Now, that is the Kenyan spirit.
I'm looking forward to also getting that inspiration from the CEO of Safaricom.
It's a pleasure to join you all for the Singapore FinTech Festival, a one of its kind globally. Indeed, we can achieve much more when we come together as a network of trusted global
Now,
partners.
today, like we said, we're talking about fintechs, and throughout the day, you're going to hear their stories, you're going to hear their challenges, you're going to hear the position of regulators, of financiers, and of course, the importance of collaboration and the impact that fintechs have.
Renee Member is a fintech enthusiast with passion in building solutions that tackle daily pain points in Africa.
This is why I'm presenting to you MobiVoucher, an e-voucher platform that seamlessly distributes aid tokens to beneficiaries via text messages.
And this next session is moderated by Kennedy
But I do agree with Cynthia that for instance, the central bank here in Kenya does offer a very allowing environment for you to be able to create something new.
Today, what I'd like to talk about is how the transformation is happening within the banking industry.
Over to you.
Thanks, Miguel. And finally, we get to the part of the conversation where we bring in the tech.
Our understanding of how to protect the data we hold, how to move that data around, I think is an area that we need to pay more attention to.
Ladies and gentlemen, the Chief FinTech Officer at the Monetary Authority of Singapore now, Mr. Sopnendu Mohanty.
And Kenya in particular has been a shining example to all of us globally to show how we can live from challenges, constraint, and get into the digital economy faster and transform the economy and the ecosystem.
I've enjoyed myself today.
I have as well, and it was good having you with me as well. So, and it was good having you too.
My name is Fena Auma. I am 12 years old. I live in a village near Mombasa in Kenya with my mother, father, and my brother Michael. But my sister lives in another city for school with my grandma. They are far, far away. Sometimes I feel alone. I love them and I miss them. Everybody is talking about the new train in town. I can't wait to take it with my family to see Grandma and my sister. In Kenya, we never give up, even when life is hard sometimes. We always remember to take care of other people, to say to each other, Hakuna Matata. One day, I want to find a good job to help my family and other people who need me. Every year, there are thousands of wildlife traveling from one place to another, passing through some dangerous challenges. But thousands of new lives are born on their journey. Just like these wildlife, we travel for a better life as well. It's a great journey indeed.
And we cannot thank our partners enough. Thank you very much to all of them. Asante sana. Without you, this would not have been possible. Now, we are ready to start our conversations here today and want to kick it off by taking a look at our financial infrastructure. And so when we take a look at that, the one thing we want to ask is, how do we move money easily through the economy? And how do we make the provision of financial services more efficient? Obviously, the answer to that is high quality infrastructure. So let's hear a little bit more about that now in a conversation with Kenya's central bank governor, that is Dr. Patrick Njoroge, in a conversation that is being moderated by Joanne Barefoot. She's a CEO and founder of Alliance for Innovative Regulation, and she's a noted advocate of regulation innovation. Joanne is a senior fellow emerita at the Harvard Kennedy School Center for Business and Government. Joanne, over to you.
Go ahead is believing to make each day a brighter day.
Unapotembea kubali ndoto zako.
It is showing everyone that we can all be heroes.
Usiwe na hofu, usiwe na shaka moyoni. Kukuja pamoja ni mwanzo.
It's those small acts that go a long way. Go ahead is our determination to rise. Going ahead is our courage to do something new. It is our faith to start all over again. Go ahead is never giving up in the face of adversity. It means growing our own. It is making the most of what we have. Going ahead is us changing our communities. It is supporting each other where we can. To go ahead. Now, that is the Kenyan spirit.
things now that need to happen to complete the journey to full financial inclusion.
Thank you, Joanne, and thank you all. I'm delighted to be part of the Singapore FinTech Festival and, of course, the iteration in Kenya, the Nairobi Online Festival. On your question, Joanne, it's true, in Kenya, we've made a lot of progress on financial inclusion. Over the last 14 years, gone from 23% of adult population that had access to financial services to currently, well, actually in 2019, it was at 83%. Remarkable in the context of what is going on. All this, of course, was made possible through the digital platforms, the transformation society had in terms of payments, etc. All which now today has created additional, you may call it an ecosystem that we are now we are in. So what we need to do going forward, I think the first thing to realize here is this is a marathon, not a sprint. And we may be doing very well by kilometer 20, let's say, but you still have 22 kilometers to go. So it's a marathon.
So your image has frozen on my screen now.
So what are the other things we need to do? So I think from our perspective, we need to increase usage. We need to think less about access, but more about usage and quality of services. And in particular, we are thinking of, for instance, expanding access and usage by those that are already underserved. Think about women, think about youth, think about access of finance by SMEs, etc. That's a major item going forward. The other item that we need to use, we need to look at is customer centricity.
Your image has frozen on my screen.
We have better customers can actually get their
as we've seen
what they want to do in terms of their own services a lot more. And finally, we need to think a little more about building resilience of individuals and individuals and households in general. And a key element there is, from our perspective, actually, is insurance. Insurance is actually a service or a product. Insurance products are actually very limited in the Kenyan context and indeed other developing nations. And as you know, health is really, I mean, health issues are probably, they actually push a lot of us back into poverty. So that is an important thing to do. So it's a marathon, and we are not quite anywhere near the last mile. I think this is something that we need to go at pace. Thank you.
The system has been muting me. I apologize for that. I have to keep trying to unmute. Governor, can you hear me?
Now I can hear you. Thank you very much, Joan.
Good. I'm asking about digital infrastructure. What will it take to build complete digital infrastructure?
Okay, thank you. So from our perspective in Kenya, we very much started, it just grew kind of organically. But I think what we have done recently is to try and backfill, meaning to think about precisely your question. Do we have a framework that we can actually follow, put some order, and ensure that we do not have missing links, as it were, or weaknesses in the entire ecosystem, etc. So what we've done in the case of Kenya, obviously everything is predicated under an objective which we call Vision 2030, which is really our blueprint for development to the year 2030. And one of the premises there, one of the key elements there is having some sort of shared prosperity, expanding shared prosperity, and also other elements, for instance, increasing savings, etc., etc. So that is really the underpinning, the foundation of everything we are doing. On top of that, recently we launched a digital blueprint, a blueprint of our digital system. This was launched in May 2019. Our president launched it, and it really has 5 different elements that really relate to or underpin the development that we want to see in the entire sort of infrastructure. And, without going to all of them, one of this, of course, is improvement in or having digital government services, expanding into
Governor,
that.
I apologize if I'm speaking over you. Your image has frozen on my computer again. I'm going to ask the next question, which is, what is the path forward on developing digital identity that can allow everyone to be able to access the financial services system, including women who in many parts of the world do not have their own identity verification capability? What are your thoughts on digital identity?
Okay, thank you. Your question about digital identity. I think the point here is that this has to be seen as a significant element of bringing people on board in the digital world. Identity is key, and it has to be that somehow we have a verifiable identity that it is me, and can be traced in terms of connections, etc. So this, on the other hand, has also to keep up with the new technologies, and indeed also looking at things from the perspective of the risks that are there. So this is one thing that I think those of us, for instance, Kenya, really benefited on, because we did have an identity system that was robust, but now we are moving to a new identity system, which is really, you may want to call it Identity System 2.0, which has all, let's say, some of the improvements, having biometric sort of information, etc., etc. But I want to
emphasize that is something that's so important. I apologize so much if I'm speaking over you. Your image has frozen on my screen. But the next question is...
Yeah, I think we're having some serious difficulty, Joan, in terms of moving from one question to another. I'm in your hands.
All right, we apologize for that with Joanne Barefoot, who seems to be having some challenges with connecting to that platform there. I would like us to indulge the Governor of Central Bank of Kenya, Dr. Patrick Njoroge, one more time. If you could please indulge me in beginning this conversation again, sir, just so that we can get this right. from the beginning. Apologies for that connection, but thank you very much, Daktari. Let's just start again with talking about the journey to financial inclusion. As many know around the world, mobile money was literally born in Kenya in 2007. But yet, you have noted, Mr. Governor, that having access is not all, that it requires other services. Could you talk to us about that and what it takes to close the gap towards getting towards full inclusion? Mr. Governor, can you hear me? Dr. Njoroge, can you hear me? Dr. Patrick Njoroge, can you hear me? All right. I wonder if we can take a short break here and take a look at our sponsors and thank them once again for this as we sort this out and continue to have that conversation with the Governor of the Central Bank of Kenya, Dr. Patrick Njoroge.
My name is Fena Auma. I am 12 years old. I live in a village near Mombasa in Kenya with my mother, father, and my brother Michael. But my sister lives in another city for school with my grandma. They are far, far away. Sometimes I feel alone. I love them and I miss them. Everybody is talking about the new train in town. I can't wait to take it with my family to see Grandma and my sister. In Kenya, we never give up, even when life is hard sometimes. We always remember to take care of other people, to say to each other, Hakuna Matata. One day, I want to find a good job to help my family and other people who need me. Every year, there are thousands of wildlife traveling from one place to another, passing through some dangerous challenges. But thousands of new lives are born on their journey. Just like these wildlife, we travel for a better life as well. It's a great journey indeed.
All right, welcome back. Now, we apologize for the digital challenges that we've experienced, but we're ready to begin our conversation now with the Governor of the Central Bank of Kenya, Dr. Patrick Njoroge. And when we're speaking about financial digital infrastructure, we're talking about how to move money easily through the system and how to make sure that we've got efficient provision of financial services. Dr. Patrick Njoroge, thank you so much for your patience, and thank you for indulging us once again. Asante sana, and apologies for the technical hitches.
That's okay.
Great,
Good to
thank
be
you.
here. I'm delighted to be here.
Absolutely, thank you very much. So let's talk about, the journey towards financial inclusion. It is well known around the world that mobile money was literally born in this country in 2007, and we've been a world leader in this respect. But Dr. Njoroge, you are on record as saying that full inclusion goes beyond just access to payments, and that there is much more that we need to put in place towards ensuring and reaching full inclusion. Could you tell us a little bit more about that?
Thank you, Yvonne, and again, delighted to be here. I think for Kenya, over the last 14 years, we've made remarkable progress in terms of inclusion. We went from 23% in 2006 of adults that were included that had access in to financial services, to now, last year, 83%. So by any standard, those are remarkable numbers, substantial transformation. But as you rightly said, access isn't everything. And there are three general directions that we need to look at. First is to realize that there are still some people that are excluded. And these will generally be people who are sort of on the margins, maybe women, maybe youth, etc. And so it is important to work and figure out how to bring them on board. Secondly, you also have to begin thinking about it's no longer just access, it is usage and quality. And that is really where we are today. Frankly, this is a marathon. And maybe the numbers I gave you before indicate that we have done very well in the first 10 kilometers, etc. But it's a marathon. We still have a lot of mileage to cover. And so we need to deal with those things. So expanding services, indeed usage by SMEs, women, etc., that is a significant element in terms of what we need to do. Secondly, another item is this customer centricity, to be much more focused on the customer. It's not about technology, it's more about the customer, satisfying customer needs. And finally, trying to expand the ecosystem so that we have greater resilience by, let's say, the individuals and households. There's a number that I find striking, that is 2/3 of shocks that push people back, at least in Kenya and also India actually, that push people back into poverty are health related. So health shocks, and we are very much aware of that in the context of the current COVID-19 pandemic. So we need to expand into those services that provide greater resilience, and for instance, insurance. As you know, in our countries, Kenya and others, similarly situated countries, insurance uptake is actually at a very low level. So those are the directions that we are expanding. It's a marathon. We need to continue running at pace.
Like you say, it's a marathon. Now, can we talk about consumer protection for a moment? You've noted that that is one of the major issues. And we've seen that mobile money and fintech are growing rapidly, and that is challenging for regulators such as the central bank, and to continue to assure customers of their safety and protection from fraud in this space. So what trends have you noticed that concern you, and how does the bank plan to address them?
Okay. In terms of consumer protection, I think the one that we have seen quite a bit, or we have been talking a lot about, and consumers are much more aware of course, is the whole business of cybersecurity. They need to be sure that their funds, let's say in their wallet, their e-wallet, are available, are there, and they are not in any way tampered by some hackers, etc. Of course, there's a bigger issue. It isn't just the consumers, it's the institutions themselves. And the institutions need to be much more resilient or much more, let's say, protect themselves much more to attacks. Now, one of the things that we have discovered, and this is not just in Kenya, it's around the world, is that the bigger risk actually is from internal actors that are in cahoots with, let's say, external hackers. So there's a lot of issues there in terms of, you want to call it governance or structures of separation of information, etc. That's an entire whole set of issues that need to be dealt with. So that's one. Cybersecurity, but hardening our infrastructure, hardening our, let's say, our infrastructure against those sort of risks. Secondly, you have, at least in Kenya and other places, you have the emergence of what we call online lenders. And these are very much predatory in terms of the way they operate and in terms of, let's say, the way they approach customers. And they are not really following what you call ethical standards in terms of consumer protection, relationship with customers, etc. That is something that we need to deal with. It's not a problem just here in Kenya. It's actually a much wider problem because, the way they operate. Now, the other problems that could also arise, money laundering, etc., but they are operating sort of in the dark corners. And it's important that we shine a light on them and bring them out into the light. And those that actually want to do proper business survive. Those that don't want to, that prefer to stay in the shadows, well, that's fine. Let them fold and move on. But that is an important element. Finally, there's the issue of data governance. This is now the new issue that is at the table. Because customers do have, and they generate in their transactions, etc., they generate information, data, and also data about themselves. And what is the governance structures around the data that is generated? And how is it protected? Who has access to it? Now, we are obviously moving ahead with various frameworks, and I think this is an area that is so important going forward, so as to protect the customer and not have malicious, let's say, institutions use it for their own ends.
Mr. Governor, to have a truly efficient financial system that is also inclusive, we need to build what is truly digital infrastructure. And so my question to you is, do we have one yet? Are we there yet? If not, what more needs to be done to get us there? And what would be the steps towards building a truly digital financial infrastructure?
Okay, thank you, Yvonne. From our perspective here in Kenya, we started off this journey 14 years ago, 15 years ago, and I think it is somewhat without, let's say, without looking at planning ahead. And so now we have to backfill and figure out what are the gaps and see if the trajectory that the entire infrastructure is taking, what are the gaps that may emerge and how do we deal with those gaps so as to have an even sort of infrastructure. So that's what we've been doing. Now, from our perspective in Kenya, the first thing is that the objective of all this is, of course, to push people forward in terms of the economic well-being. And that is underpinned in our Vision 2030. For instance, the whole business of inclusiveness, so that we have much more inclusion in opportunities, etc. Right? So that is an important element. what also has happened in terms of the digital infrastructure, last year in May 2019, the president launched a digital platform, blueprint, a blueprint of our digital transformation. And this actually has 5 important elements, and I'm not going to go through all of them, but for instance, one of them is the digital government, expanding the services of government in the digital arena so that you can pay taxes, you can get your passport, etc. All those services need to be digitized. And importantly, also things like the courts, etc. And then also things like the digital businesses. We've talked about that a bit earlier, etc. So that is the blueprint that underpins our development. From our perspective, there are also other things which we are picking from this, which is the area of payments, the area of supporting a 24/7 economy, etc. It's a whole sort of, let's say, development, a whole journey that we have embarked on.
One of the key things about, that digital footprint and the digital blueprint that we are sort of embarking on as a nation, particularly here in Kenya, one of the ways is obviously, getting a digital identity. Now, we know in the traditional sense, that was something that was exclusionary, for a while. Government issued IDs, particularly to vulnerable groups like women. But now we're moving into the digital space, and the issue of, verifying identities is also something that will be important. And we know that around the world, there's many people who are working on establishing digital identity systems. Obviously, it'll serve 2 purposes, making sure that there is more inclusion and also to counter financial crime. But what would be the best way towards building a workable system of digital ID?
Thank you. This is something that is vital in terms of the digital transformation, a digital identity. And the identity just says that I am who I am, nothing beyond that. I am so and so, that's it. And this has to be me. And I am connected, let's say, to all the other services through this digital identity. So from our perspective, at least here in Kenya, we had an old identity system, and that actually had, it ran its course, but we now need an identity, our new identity system that really can build on other, let's say, other things. And I mean here, for instance, much more biometric in its the information that it has, etc. So this is where we need to learn from other countries that have been on this path. And Singapore, for instance, and indeed other countries as well, have been on this journey for a while. But I think India actually is another country that has done remarkably well in terms of digital identity. So I think the first element is to learn from others. Let's not reinvent the wheel. But it has to be an identity system that keeps up with the technologies that are there, technological advancements, so as to, in fact, to stop, let's say, to make it harder for people to, let's say, steal, or should we say, change, alter somebody's identity, etc. So that's what I would say in a nutshell. But I think this is a journey that we are on, and other countries actually have been on, and I think we'll be on for some time.
Yeah, and learning from each other is I like that you said about that, not necessarily reinventing the wheel, but learning from those who are doing it and finding a way to adapt that. And I'd like us to stay on the issue of digital identity for a moment, because that's also very key for the know your customer requirements, and that's very important for anti-money laundering. But in some ways that can act as an exclusion for people and end up harming the innocent. So while we're still talking about the issue of digital ID and bringing bringing in the KYC requirements. What solutions do you see when regards to technology and to policy to making sure that the KYC rules, the digital identity, will be used for good and will not likely harm, those who are innocent in this process?
Okay. So the first thing here is to appreciate really what you say, that KYC is extremely important, meaning know your customer. So any financial institution needs to know its customer. Now, when we talk financial institution, we also mean actually the telcos, because after all, this is all predicated on a digital sort of platform. So know your customer is extremely important. However, the point here is that it has to be risk-based. So, for instance, if it is somebody who is making all sorts of transactions, let's say in multiple currencies or large transactions, well, then the institution really needs to know what are the, needs to know not just the business, but the transactions, etc. There's a lot of knowledge that needs to be put there. Now, that shouldn't be that difficult, given that a lot of the information can be stored electronically, etc. It is in sort of a very tall order. I think here's where we need to use technology, reg tech, etc., to make sure that that is done easily. But I think the point here is that if you go back to, let's say, to the other side of the spectrum, where you have, let's say, a street, somebody selling fruit seller on sort of the corner of the street or whatever, or a lady who is selling some wares on the street. Of course, there's a KYC element there that the provider of the financial transactions, in terms of the e-wallet, etc., needs to know. But I think the point here is that it has to be risk-based, and it shouldn't lead to exclusion. You shouldn't subject both of those to the same level of KYC.
That's right. At the start of this, we talked about, regulators keeping up, with a lot of the innovation that is happening. And in some ways, it would seem that, it's obviously the pace of innovation that happens quite rapidly. And there is a challenge with regulatory bodies such as the Central Bank of Kenya and others keeping up with that. And that's okay, because, the processes are designed to be slow and deliberative. But some can say that that leads to some, sort of bureaucratic challenges. What do you think would be the keys to making sure that regulators develop a culture and a policy that, moves in line and in tandem with the innovation that is taking place?
Thank you. I think, speaking for all regulators, I think we've just had a bad rep. That's basically it, I think the point here is that regulators are very focused on, or should remain very focused on, the risks, meaning they need to understand exactly what are the risks that these new products or a new product are subjecting the financial ability risks need to be key. Now, they should be agnostic about the technology as such, right? Meaning when the things are brought to us, it's not the technology that matters. And unfortunately, some of us get, and indeed, thanks to some of the promoters, we get very excited about the technology side. It shouldn't be that. It should really be two questions: financial stability and all the other elements of the central banker's mandate, and also to ask the question: what problem is this product solving, from a point of view of the people? Because after all this is premised on the premise that we are solving people's problems. That's why we are doing what we are doing. So the regulator should not be in the business of pushing down innovation. On the contrary, is actually asking those hard questions. And then, walking that journey. So I really think regulators should be the most innovative people of all, because they understand exactly what it is and really are willing to ask those questions and subject whatever products, whatever innovations that are brought to them to these questions, and walk the journey, as it were, with the promoters. Well, Kenya, actually, we were the first to do this sort of, we called it the test and learn approach when M-Pesa was brought to us. Nowadays, there is the new word, unboxing. That's a word that I think we did sandboxing before sandboxing was invented. And in a sense, that is what I would say in terms of the regulator.
Yes, so your final advice to other regulators such as yourself, I like that you say you were doing sandboxing before it was even called sandboxing. And it reminds me of something that Jason Bauer said in one of our sessions yesterday, that if the pace of change outside your organization, outweighs the change of pace within your organization, he said, then the end is nigh. And you're talking about sandboxing even before it was a thing. So what would your advice be to other regulators? And I like that you said it's that you should be at the forefront of innovation, but it's beyond the technology itself, but what it does and the ethics, I suppose, behind it. So what would you say to other regulators who are watching us from around the world right now?
Okay, I think the first thing I would say is we are on this journey together with the innovators. Let's first appreciate that the objectives are similar. The reason we are in this business is for the shareholders, or should we say all the stakeholders, our population around the world. So in some sense, we have common objectives, and we have to appreciate that. Secondly, let's learn from each other. We have learned from other regulators. As I said, we've been working, for instance, with the Monetary Authority of Singapore and other regulators around the world on specific things, not just on things that are very close and dear to us, like, let's say, the BDs and things, but other things as well. But I think that's what we need to learn from each other. Thirdly is just to realize that in your own area, you have to, in some sense, use your convening power. And I think the Monetary Authority of Singapore and ourselves are good examples of this, we should say, in terms of the FinTech festivals and all that. This is really using our convening power and bringing people around, the innovators, providing space. And this is, I think, the way things will go forward.
Indeed, that's a good place to leave it. Thank you so much, Dr. Patrick Njoroge, the Governor of the Central Bank of Kenya. Some great words about learning from each other and using your convening power towards making sure that we are moving forward in the right direction. And indeed, thank you to the Central Bank of Kenya and the Monetary Authority of Singapore for putting this together. We're so glad to be part of this great event, part of 40 cities around the world, just convening here over the last couple of days to try and find solutions as we move forward and look ahead towards a post-COVID-19 world. Mr. Governor, thank you very much for your time here with us today.
Thank you, Yvonne. Thank you very much.
That convening power is what it's all about here. Remember, you can follow on Twitter at Afro-Asia FinTech for some more updates on that. And what a great conversation we've just had that sets the stage for the day today with the Governor of the Central Bank of Kenya, Dr. Patrick Njoroge, talking about learning from each other. And that's what we're going to be doing. We'll have a series of great conversations that, will get off the back of that one I've just had with the Central Bank Governor, talking about responsible digital leadership and governance. We'll also be focusing on financial inclusion. And the Governor talked about that as well. Those are some panel sessions you can look forward to today. But once again, let's say thank you to one of our partners here, and that is Huawei.
My name is Fena Auma. I am 12 years old. I live in a village near Mombasa in Kenya with my mother, father, and my brother Michael. But my sister lives in another city for school with my grandma. They are far, far away. Sometimes I feel alone. I love them and I miss them. Everybody is talking about the new train in town. I can't wait to take it with my family to see grandma and my sister. In Kenya, we never give up, even when life is hard sometimes. We always remember to take care of other people, to say to each other, Hakuna Matata. One day, I want to find a good job to help my family and other people who need me. Every year, there are thousands of wildlife traveling from one place to another, passing through some dangerous challenges. But thousands of new lives are born on their journey. Just like these wildlife, we travel for a better life as well. It's a great journey indeed.
Thank you to Huawei, and thank you very much as well to the Central Bank of Kenya for organizing this Nairobi Online City event. And like we said, and the governor had mentioned, it's all about the convening power. And one of the things that they have done in terms of just bringing multilateral stakeholders, leaders in government, in business, in finance, as well as at the UN, to just have a conversation on the way forward. We've been talking about economic recovery as we look forward to what a post-COVID-19 world could possibly look like, and what are some of the things that need to be done. One of the convening powers is bringing together fintech startups that are doing some great things towards financial inclusion. And that is why the CBK held a virtual Africa Hackathon in August of this year. The winner, that is SME Credit Pro from Cameroon, will be participating in the Global FinTech Accelerator at the Singapore FinTech Festival on the 10th of December. But now we want to showcase one of the finalists from that hackathon that took place, and that is Blue ICT Solutions, which is led by one Javan Owino, who is the founder and who sets and drives the technology or the technical and growth strategy for Blue ICT Solutions, which aims to create a seamless and robust fintech platform and infrastructure for East Africa. Let's watch.
Hello everyone, from Nairobi, Kenya, I present to you our FinTech Showcase. Every year we have over 400,000 small and medium enterprises that do shut down in Kenya. The same scenario repeats itself across different African countries. One of the main reasons for this is adequate access to capital for SMEs. meet Mr. Abdi, Mr. Francis, and Miss Judy. These are sample of our entrepreneurs that we've been able to talk to validate this concept. Their needs across different segments and industries are quite similar. So, fun enough, is their mode of operations. So, we thought, what can we come up with that would make our entrepreneurs be able to be linked directly to financial services, and also to be able to have a better understanding of how their businesses are run day to day, what opportunities are they missing, and what are their chances for growth. Looking at their backends, we were able to see a lot of records that are still in paper format, not digitized and very hard to access. So we came up with a product that converts paper records into a digital platform that has a front end, which is a point of sale, and a back end that offers business analytics. We are transforming the invisible data to be visible for both the SME and any financial services provider. For our target customers, we are able to come up with 13 different data points, which inform our scoring and algorithm that is able to determine credit scores, viability for linkage to our marketplace, and also we are able to share this data with banks and other partners. Our typical enterprise that we are targeting with Loniwa has about 1 to 20 employees and an annual revenue of $50,000 to $100,000. Our point of sale market solution is quite cheap at only $5 monthly, compared to the current cost of acquisition within the market, which is an initial cost of up to $500. So our target customers would be around 70,000 every year, and our revenue model is quite simple, based on monthly subscription fees and mobile processing fees. We have been in the market for the last 4 months, and we've been able to onboard 1,007 merchants in Nairobi, of which 471 are now paying customers, and that gives us a monthly revenue of around $2,300. Our roadmap is divided into 4 stages, and currently we started with offering the free point of sale solution that works both offline and online. Our other models will now be based on the data scores we are able to collect from these customers and where we are able to link them. The team behind Loniwa is led by 2 gentlemen and 1 lady, handling technology and business development, as well as consulting, with over 5 years experience and over 10 years industry experience. In summary, Loniwa offers SMEs what no other platform would offer them. That is advanced technology, advanced analytics, a network of partners that builds a value chain of exchanging goods and services, skill sets in accounting, payroll processing, payslips development, access to capital and banking partners, and access to embedded digital payment platforms. For any partnership inquiries, I would like to learn more about our model. We welcome you to drop us an email at sme@bluecitysolutions.com or to my email javan@bluecitysolutions.com. Thank you so much for your time.
Thank you very much for that, Javan. And congratulations on being a finalist in that hackathon. We wish you all the best in that. Now, one of the key things about a truly digital infrastructure is making sure that there's some ethics in that and that there is responsible digital leadership and governance. And that is the basis of our next panel conversation. And that will be moderated by Robert Nyamu, who's partner and technology consulting leader at EY East Africa. That's Ernst & Young. He's also the firm's technology consulting leader for East Africa, and he's responsible for a diverse range of technology-enabled solutions. Robert, we leave this panel in your able hands.
Good morning, good afternoon, and good evening, depending on where you're watching us from. And welcome to this exciting discussion as per the introduction. which will focus on responsible digital leadership and governance. And I'm joined by a very exciting and experienced panel of speakers. And I'll just mention briefly about them, and they will also introduce themselves a bit more when they get into the various discussions. So the first one is Jack, in no particular order, is Jack Ngari, who's the Managing Director of Microsoft Africa Development Center. And second is Yuko Kawai, joining us all the way from Japan, Tokyo, Japan. And she's a senior researcher with Japan Digital Design Inc. And last but not least is Kennedy Mubita, who's the Africa Region Head for SC Ventures. And they'll give us an idea of what they do for about half a minute when they begin to speak. But I think maybe just to set the context, and thank you very much for that introduction. So my name is Robert Nyamo. I head the technology consulting business for EY across East Africa. And my passion, which I've been doing for the last close to 2 decades, is advising businesses on how they can really embark on a transformation journey. Leveraging technology as a key enabler amongst various other things. So I'm very excited to be moderating this session today, and with the experienced panel that we have with us of speakers, I think it will make for a very exciting conversation. So I think each of the speakers will share some views, and thereafter we'll also take some questions. We'll also take some questions from the audience. I guess one of the facilitators will let us know how that will be done. So maybe just to kick off and to set the context, and I think this is a really good time to be having this discussion, because with COVID having befallen us, I think this whole discussion around digital transformation, which to some people had almost become cliche, or some people were looking at it as a futuristic concept to be discussed later, has been thrust really strongly in our midst. And now it's not a question of whether you want to take the journey. You really have to take the journey, or get disrupted. So there are 2 things here. So what's going to happen is going to happen. So the organizations really need to decide where they're going to be placed within that paradigm. Are they going to be market leaders and show the way, take on a bit of experimentation, fail safe and fail trying, or are they going to take a back seat and wait for other organizations to begin the process and try a few things here and there? So I think when COVID, especially in this part of the world, in East Africa, starting I think around mid-March is when we reported our first cases. This whole idea around digital transformation was accelerated many-fold. Things that we expected to take 2-3 years, and we're discussing 2025 and 2027 and 2030, have happened in those 9 months. And it's both an exciting as well as a scary shift. And I think for those who are thought leaders and daring to experiment, they're finding these exciting times a little bit scary, because if you don't have butterflies in your tummy around what's happening around us, then I think you probably maybe you're not observing enough. So I think it's a really good time to have this discussion with all the digitalization happening around us. There are lots of issues emerging. We're seeing industries converging, value chains getting disrupted, new market players emerging, both here and globally as well, globally and regionally as well. And the question is, which way forward? And there are a couple of questions which our panel of eminent speakers here will touch on in their own perspectives. They will have rich experience and they'll share their views. But I think some of the key points that I'd like to highlight, just that as I set the context on this discussion, is around what's the role of humans? So we talk about digitalization at an exponential rate. What does that mean? Does that mean digitalization to the exclusion of humans? Does that mean digitalization co-opting humans? What's the role of humans in all of this? Is it digital first and humans, or human first and digital, or humans and digital coexisting? And where's the role of ethics in all this? So We're talking more and more about AI doing quite a number of things that humans were previously doing. And as we know, and for those who understand technology well, AI is, is a double-edged sword depending on how you're, looking to deploy it. So it can either be extremely beneficial, as we've seen, in many fields, from medical to many others. And I know this is a fintech discussion, but I'll touch on a few other sectors as we move, because fintech sits at the center of a very wide ecosystem and supports various other ecosystems beside it. So we might see examples from other sub sectors and sectors. So, and what's the role of regulation? So, what's the role of ethics in all of this? What's the role of regulation? And what's the role of humans and talent? What does this really mean? How can you basically be in charge of your digital transformation journey, and how do you balance out these various facets and principles? And I think we'll hear some views from our speakers around that. I have some views around that, and I'll chip in, but I think today we'd like to hear first from the speakers, and they'll share their views from their own perspectives. I'll be happy to take some questions. There's maybe just before I introduce the speakers to give us some of their thoughts. There's a particular framework that I really like, and it's called the Dealing Way, and it touches on 4 key values that are really important for us to bear in mind, especially now. And I'll just touch on the values very quickly, because there's 7 other principles, but the values are around people first and digital always. So having a digital mindset in everything that you do. So if you were traditionally doing things a certain way, how can you now do this in the context of this digital age that we are well into, and we've been thrust even further into, and at an accelerated pace by COVID-19 across the world. And the second is being tech ahead, thinking about the role of technology and having a technology mindset in everything that you do. And that will drive, efficiencies, control, and governance across various things that you do, provided you do it appropriately. And the third key value that I'd like to mention is being data mindful. We say that data is the new oil. It really is. So, but understanding it and being able to calibrate it, analyze it, and use it to drive insightful decision making is when you really experience the power of data as an asset. Otherwise, it's just something within your infrastructure and within your environment until you really start to transform its value as a real asset. And as we hear people say, it's the new oil. And the last but not least is open by default. So I think those are the 4 key values that I wanted to touch on, and then I'll introduce the speakers. I think I'll just start off with Jack, maybe just to give us his views, for a few minutes around this exciting topic around responsible digital leadership and governance, and then we'll take on the other speakers thereafter. So Jack, over to you. Give us some of your views.
Thank you, Robert, and thanks a lot to the Monetary Authority of Singapore and the Central Bank of Kenya for organizing the Afro-Asia FinTech Summit. It's really a great honor to be part of a panel in such a forum. I'll quickly go into my views. Now, I take almost like an anthropological view of how the world has changed first. I remember back in the days when I was in early man in the Paleolithic era, when fire was discovered in East Africa, by the way. By Stone Age man, there's all of these challenges of how to harness the power of fire, both for the good and for the bad. There's this always dichotomy with every new invention that man goes through, where there's always going to be an aspect of how do we better our society as a whole, using the power that we've discovered, and at the same time, how do we protect ourselves against it in other aspects. And you can go down the list through the invention of electricity and the second industrial revolution, and right down to even when explorers were looking for new places to discover. We approach places like Africa that were not previously discovered with either religion or trade or colonization, and so you have all these different views that afflict every single generation as they discover new things. And so we are living in quite an exciting generation where we've discovered digital power. And a lot of leaders struggle a lot with how do you harness it for the good, at the same time making sure you protect yourself from the bad. So typically this dichotomy. And what the digital age has taught us, whereas there's always going to be this fine line and a blurred line between good and bad. Take, for example, responsible AI. To what extent can AI replace human? And at the same time, digital currency. What's the role of digital currency in the world? And on data privacy. Is it okay for social media to use our data against us or to target ads to us? So there are all these, sort of issues that have occurred. And to be honest, the lines between, whereas before it was the dichotomy between good and bad, now it's totally blurred. But as a leader, in my view, having run a digital business, what are some of the things you look at, and what are some of the things that you can build internally to advise you and to advise your organization in the best possible way, and also maintain a good level of governance? And some of the things that come to mind is, number one, people first, as already put. You need to get the right kind of team in place. You need to make sure that you're always people-centric. You're always thinking about people first. And one of the main questions I asked when I was running a digital business is, hey, you're moving all the services digital. What happens to the people you're replacing? You're going to just fire all of them, declare them all redundant? And that was always a struggle for some of us. And I'm sure many people have gone through that. And what you try and do is retrain and rejig the human capital to make sure that it's ready for the next evolution. Now, sometimes it's sad. Some people may not be all along the way, but by and large, it's your responsibility as a leader to make sure that you always put people first. And at the same time, your team is always going to be one of the main things that you focus on. At Microsoft, I remember one of the things that made news a couple of weeks ago was that we dropped the requirement for university degrees, for example. And so we need people who are lifelong learners, who have declared interest in a particular subject, and are pursuing it, whether or not they have the academic structure in place. And so those are some of the things that the digital age is teaching us. You're looking more for the skill and the attitude more than anything else. The next thing I want to talk about is the key is the mindset. And being open, having a growth mindset. Carol talked about people who can be able to see beyond what the current circumstances are. Able to join the dots, anecdotally or actually. That for example, if I invent this new technology, how then does it impact the rest of the society? And so those are the kind of things that, as a leader, you need to be able to focus on. Having a mindset that is able to join these dots in one way or another. The other thing that, you look at is, can a leader or are organizations able to operate in both long-term and short-term? And I kind of call that temporal ambidexterity. We do that in MBA classes. You need people to focus on the short-term as well as the long-term. More and more, you're finding a scenario where leaders to focus on the short-term and long-term, but also at high level and at low level. Because your technology is impacting individuals, households at real time, getting feedback immediately. If they don't like your service, they're going to say you don't like it and post it on social media. So you need to be able to juggle not only short-term and long-term goals, but high-level and low-level type views of your products and services. And at the same time, be able to articulate them in terms of a governance perspective. What does it mean overall to regulators, to your stakeholders, etc. Those are the kind of things that a mindset shift needs to happen to leaders. The other thing is also behaviors and values. And this is pretty much the core of everything. The fact that there are certain eroding behaviors that are happening right now in digital space. And when I say eroding, I could give a good example. Society is built with top-down approaches. Now, in the digital age, you're finding everyone has an opinion on what they're doing. And so it's actually a bottom-up approach coming through. And so from a leadership perspective, you are able to synthesize this information coming not only from the bottom, the top, and be able to give. I'll touch on just one important behavior as well, which means exploring behavior. I remember a scenario where we deployed an app to a certain African country. And It was a financial services app. And what happened was that we visited the country and we discovered that a lot of the people speak French. We didn't, unbeknownst to us, we assumed that the app should also be in French and English. At the same time, we discovered that, hey, look, people don't like the language of French in official documents. And so you're able to synthesize this information that's coming from the user and quickly turn around and be able to deploy an app that actually makes sense to your audience. In closing, the last thing is regulatory framework. Now, you must be able to also take the information that you get, as well as create a story around what the innovation is in the digital space, because regulation will come. In places such as Kenya, we have a very liberal and quite supportive regulatory framework. It's changing over time, but you have to be able to craft your story of what the innovation is doing to the society, and that's very critical. Thank you.
Thank you very much, Jack. That's a really good discussion. And in maybe just 20 seconds, what are the key takeaways that you'd like the audience to take away from your discussion around the key tenets of digital leadership? Just very quickly, what's the key takeaway?
So I would narrow it down to people first. So making sure, and people first means not only customer first, but also team first, your individual team. Those people come first. The second thing is having the right set of values. Everything you do must be guided by the right set of values. Whether it's responsible AI, whether it's digital currency, all of them must be guided by the right set.
Thank you very much, Jack. I think very, very, very good words. I think we'll also, I'm sure there'll be some questions for you and for the rest of the speakers from the audience. But thank you so much for sharing your thoughts, Jack. And we'll come back to you on some of the additional points. So I'd like now to shift to Yuko, all the way in Japan, Tokyo. Welcome. Welcome to the discussion. So I'd like to invite you for a few minutes to share your thoughts around this exciting topic. Over to you, Yuko.
Thank you very much, Robert, and thank you so much for Central Bank of Kenya and the other organizers to invite me over to this very exciting panel. Although I really wanted to visit Nairobi in person, and I first visited Nairobi last year, and that was such a fascinating experience. So I hope that in the near future I can just make a visit over there once again. My name is Yuko Kawai, and I'm joining from Tokyo. And I'm currently working for the company called Japan Digital Design Inc., which is a part of a large the banking group in Japan. Previously, I was working for the Central Bank of Japan up until very recently, and for 18 years. So I would like to make comments from the private sector and public sector viewpoints. So first, let me pick up the one principle, which is the audience focus. And several times already that it was mentioned that people first. And this is what I want to put in the perspective of audience first, audience focus. To me, this is the most, I would say, neglected principle in discussing the digital innovation. And many projects fail due to the lack of scalable demands from the audience. For example, currently there are active discussions going on around CBDC, the central bank digital currency. And there are numerous issues like the architecture of digital currency issuance, where it should be direct, indirect, and should DOT blockchain be used, and so forth. But the one very important question central bankers are asking themselves, and we need to ask ourselves, is do individual consumers really need the digital sovereign currencies? Will they be used in corporate transaction or financial contract settlement? If so, what would be the benefit, advantage over the existing digital format of sovereign currencies, which is the reserve deposit with the central bank? So CBDC simply is an example to show the architecture. It's just an example to show that the digital services, including CBDC and others, should depend upon the audience they face. And the degree of the demand for CBDC must be different country by country, and it is not something you can just make it happen only because some other countries are doing it. So this is my example of like the putting the audience first in designing any of the digital services or digitalization, and even in the profit the seeking private sector, I occasionally hear the innovation products, the innovation projects which lack the viewpoints of audience. When I hear the question like, what can we do with AI, what can we do with blockchain and DLT, so forth, I get really alarmed and always try to identify the pain points, i.e. the problems to be solved by applying technologies. So the technology-focused digitalization or any type of, well, non-digital, digital, doesn't matter, products lacking the solid demand from the audience will never thrive, is my opinion. The second is the what Robert has mentioned, it's data. It's about the data, and data is powerful yet very sensitive project. As a different person feels very differently about the data usage, and different countries have the different the common sense or the history of the data usage. I personally believe China is using data to the very, very good extent, and to promote the welfare of the society. But I don't think the larger economies, including Japan, will come to the level of China in terms of the level of the usage of the data, because the historical background of society, the social reasons, and from other reasons. So the way to handle data depends on the culture and circumstances. It's again the people. So I really would like to suggest that one naive common rule to use the data. When you want to use the data, you really need to think about the welfare of the data owner, like individual, the corporations. Say, for example, if I want to provide the data to my trusted service provider because I want to have my life easier, and that's fine. But on the other hand, I really would be very intimidated if somebody pick my everyday life, even if nothing harmful is intended. So it's again like you really need to think about the people behind the data or behind the digital technology you want to utilize. Finally, I really would like to suggest the digital first strategy, which was also mentioned by Robert, I think. There is like the one I entered this when first touched upon this fintech world just a couple of years ago. It was the very thematic the approach was O2O, which is offline to online, and they're trying to digitize as many things as possible in the real world to shift over to the digitalized world. But now I think the trend is more on the OMO, which is online merges with offline, which means that it really doesn't matter whether it's a digitalization or not. I mean, the best the methodology to be applied for the people's demand, as I said, audience demand matters most. So in order to achieve such, maybe online is better, or maybe offline is better, or maybe the combination online and offline is better. So it's again like the same thing, like they putting the people's perspective first, ahead of the digital technology utilization. One last point I would like to make from the governance perspective is the existing rules and regulatory frameworks are normally aligned with the offline traditional real-world activities. They may look obsolete in the digital world, and sometimes it is very true that they need to be changed. However, the core purpose of the regulations, such as may need to be preserved in the digital world as well, such as the customer protection or the prevention of the abusive monopoly and so forth. It is very difficult to properly balance between the innovation and protection, but I personally believe that winning strategy in this changing world is to keep the active dialogue between the regulators and practitioners in order to be very flexible and not forgetting the core principle. Thank you.
Thank you very much, Yuko. And I think maybe in 10 seconds, I heard quite a bit of people first in your discussion. In 10 seconds, what would your key takeaway be for the audience? What do you want the audience to take away from your discussion? You discussed some very good points there. What's your key takeaway in 10 seconds?
Okay. Sometimes it's so fascinating to talk about technology and newly invented things. But please don't start from the technology. Please start from the people. Please start from the designer. Please start from the pain points you want to solve, and think about the technology to be applied to best resolve those issues.
Thank you very much, Yuko. I couldn't agree more. I think we talk about digital, and more digital, but I think let's not forget the role of people in all of this, and it's always going to be a people-first world. So thank you very much for sharing your views, Yuko. We'll come back to you with some of the questions later on. So now I'd like to move on to Kennedy Mobita, and he'll introduce himself a little bit more and tell us what he does and share his views around this exciting topic. Over to you, Kennedy.
Thank you very much, and thank you to the Central Bank for inviting me to participate in this forum, in this panel. This is a subject that's quite dear to my heart, and sometimes I'm actually finding it's an opportunity for us again to share ideas in terms of how we can look at digital in a different way. I work for SC Ventures, which is a business unit of Standard Chartered Bank. We are created to promote innovation, invest in disruptive technologies, and explore alternative ways of doing business. And I guess the last sentence there, exploring alternative ways of doing business, has been necessitated by developments in ICT globally. And I'll obviously add to what my colleagues have mentioned, because the themes are basically the same, but we'll probably put it with a bit of from our perspective. I have 7 key points that I'd like to make. They're not the only one, but the first one is that I think the pace of technology has been so fast that technology itself has become a subject. And so it's always important to remember that digital technology is a tool. It is not an objective. And just like cars are tools for transportation. So the issue of cars and airplanes is transportation. And digital is also a tool to achieve societal goals. And we should be careful not to make it an objective in its own right, but use it as a tool. The second point that I wanted to make is that, digital and governance, as the point that my colleagues have already mentioned, should focus on societal objectives. And in our lab here in Kenya, Nairobi, we're actually looking at digital from a perspective of value chains. And so we look at how do you apply digital to improve, say, crops in the agricultural industry? How do we apply digital in the medicine space, in the transportation space, in the commerce space? So the subject matter is always the activity that's in society, which has always been the same. And so as leaders in the digital space, we should be looking at how do we leverage these new tools to facilitate or to make these other industries more efficient. And as we digitalize and as we digitize various industries, they make them more susceptible now to applying the digital tools that we have to improve and solve those issues. One statistic that was quoted, that I can quote from PwC, was that 70% of managers are concerned about digital. And that was presented as though it's a positive view. I actually viewed it as a negative view, because it means if 70% of CEOs are worried, it means that they're not comfortable with the changes that will happen to their industries, and they are actually looking for how they survive, will they be able to exist. And so the fact that they don't know how to apply the tools means that there's a lot of space, and us who are in the digital space should lead and help them basically apply their digital technology tools to their current services, to the current services that they provide to society, because the services that people need in society will remain the same. People need transportation, they need food, they need shelter, they need clothing. And digital is a tool that we should focus on to therefore resolve these issues. We should not build, the third point is we should not build technology solutions for their own sake. We should have a problem-focused technology management style. At SC Ventures, we actually have what we call a FinTech bridge. And if you go there, you will find the challenges. We do not ask questions like, what's your blockchain strategy, or what's your API strategy, and how do you use cryptography. We don't have those kind of challenges. We have common problems that people experience, and we are inviting financial technology companies and people who have understanding to provide solutions with a technology, digital mindset. I believe you said that earlier. Looking at what we do and how we live with a digital mindset, and then proposing these to the industry, and actually leading in terms of applying these solutions and solving those basic societal problems. The other issue, which is my fifth point, is the focus on fair outcomes. In Kenya, we've had a lot of discussion on the lending companies. Just because we now have user interfaces that can allow people to access loans very quickly, and we can validate who they are digitally. People have taken advantage of this. Not everybody, but some people have taken advantage of this, and they have not used digital tools to estimate or understand what the needs of the people who are borrowing are. And a lot of people have been borrowing and spending money on gambling, or borrowing beyond their means, or not being able to align their use of technologies to what they actually need. And therefore, a lot of people have been driven into have basically had bad debts, and so we should look for fair outcomes. And so probably like in that area of lending, which the central bank governor has been speaking about quite a bit of time, there are digital tools to enable us assess whether the person borrowing needs that money and whether they've used the money for what they intended it to achieve. But a lot of people who take a very basic view on digital applications just say, just because I can give a UI that can access, people can access funding, I'm going to give them funding and then lend them at 90% because my loss rate is not going to be that high. And so we should look for fair outcomes when we're applying digital tools in our businesses. The other one is digital leaders should own the risk mitigation agenda. They should not look at risk mitigation as an impediment or as if it's been imposed on them. And therefore, the governance framework of an entity or a fintech or a company that's applying digital tools should ensure that it manages the risk, and that is part and parcel of innovation. So risk mitigation is part of innovation. In fact, a lot of the useful innovation in society is actually to mitigate the risk and ensure that the risks of applying that technology are mitigated, and that because this is a new area that's evolving very, very quickly, a lot of people using these digital tools don't understand the risks that they are carrying. And as leaders, we need to be able to think possibly on their behalf, because it will not be possible to train everybody to understand the cybersecurity risk of accessing a website, etc. So you need to actually front load the products with risk mitigation tools before you deploy them in the marketplace. The last point that I would make is that we should view the regulators as allies, not enemies. And now this, I always say this and people find it controversial, but when you are dealing with the regulator, you should look at what is the mission for which a regulator has been set up. Whether it's the communications authorities or the central banks, what have they been set up for? And what are they trying to solve? And instead of saying, I cannot do something because a regulator is stopping me from doing something, we should actually approach the regulator, and this is something we do quite frequently from our lab, is that we approach the regulator and help them fulfill their mission by deploying technology. For instance, facial recognition. Possibly when you do a digital facial recognition, you might actually be better than a teller who's just looking at a receipt. I do have some relatives who are quite close who look very, very similar. Sometimes one carries the other's ID and they use it. Now when you're using digital tools, you might actually have a better accuracy and be able to tell between twins, depending on how your platform is. And so leaders should look at regulators, find out what their mission is, and fulfill that mission better, and then go and demonstrate to the regulators that, you're concerned about this risk, you're concerned about AML risk, you're concerned about lending risk. I have digital tools that you can deploy to achieve your mission, and so that the regulator starts seeing you as a partner who is helping meet that societal goal and helping meet the regulation. So those for me are the 7 key points that we have. Of course, Jack mentioned the issue of training, so I didn't repeat that because I have it on my schedule as well, the fact that you need to train your staff and develop them. But in terms of the key issues is, don't look at digital as a tool. Own the risk management framework, focus on fair outcomes, and look at the societal impact of your innovation rather than just seeing what you're going to make out of it yourselves.
Thank you very much, Kennedy. Like we promised, I think you've seen the rich array of ideas coming through from the three speakers. So, like I think those are very good points for the audience to ponder over, because I think there's a lot of discussion around digital. I like what you brought out, Kennedy. One additional point: this should not be digital for digital's sake, but digital is a means to an end, not an end in itself. So I think some really good discussion points coming through from Jack, from Yuko, and from Kennedy. And I think that should give our audience. I think this is a topic. If we're allowed, we'll probably speak. All day. Every day, at least for me, I'm very passionate about this area. But I think in the time that we have, I think you've shared some very good points with the audience. So I think I see a question that has come through from the audience. It's a fairly wide-angle kind of question. So I'll put it to you speakers, and you can give your perspectives as we wait for other questions to come through. We'll see whether there are other questions around. And the questions from Kelvin around what is the best model for managing enterprise-wide technology-enabled transformation. So you can each give your views as we see, maybe just a minute each, what your perspective is around this. Just your quick high-level views. I know this is a wide topic. I could speak about this for 2 hours because I'm involved in advising businesses. But maybe starting with you, Jack, what's your quick takeaway around this question? I know it's you can take it from any perspective you like. Jack?
Yeah. I'll try and take the unconventional approach as usual. Carl Rees of who heads up the MIT lab, said that business transformation, digital transformation, when done right, is like a business turning from a caterpillar to a butterfly. When done wrong, it's like getting a faster caterpillar. So you have all this array of things that you need to address in your business. I don't want to sound, like a broken record, but the first thing you have to do is address what the customer pain point of trying to achieve from an organizational perspective. Is it revenue growth? Is it efficiency? Is it cost reduction? Is it customer delight? There's some of these things. It could be a mix of all of them or some of them, but the overarching point is, what do you want to achieve? And out of a whole list of what you want to achieve is prioritization. Many organizations have got tons of projects, whether it's digitizing, the front end, back end, the front office, the back office, the middle office, digitizing loans, digitizing, savings. There are tons of things you can do. But the idea is, which one gives you the biggest bang for your buck, or creates the transformation that you want to do, and prioritize just those one or two things that you want to achieve, and then approach it in an agile mindset. You do not know what the outcome is, and I'll tell you what, even if you approach the biggest of the brands, in the digital space, they will also be learning with you, because every organization is unique, and whether we like to do it or not, we have nuances that inform the technology and how it's executed. So one technology that works, let's say, the biggest bank in the US, may not necessarily work for the biggest bank in Kenya or Uganda or Tanzania. There's something new onto the model that we need to understand. And infuse that into what and then now go forward and make sure that it's a learning experience. One of the things I always say is always be on better. Never say we're in production. We always say we're in beta testing. We have deployed it, but we're still in beta because we're learning and we're tweaking.
All right, thank you very much, Jack. I know we've run out of time, but I wanted to give an opportunity to Kennedy and Yuko, maybe just to add some very quick thoughts around that question, if you may. If there's anything that you want to add to what Jack mentioned, are you comfortable? Yeah, Kennedy?
In addition to what Jack mentioned, basically, if we look at our model, first of all, it depends on how much risk appetite do you have, and how much capital do you have to support that risk. You might have very you must have a very high risk appetite, but if you don't have the capital to support potential losses, then probably you shouldn't do that. And then secondly, it depends on what industry you are. SC Ventures is a part of Standard Chartered Bank, which is set up for innovation, but in a sense we are separated from the bank because the bank is a regulated institution, and therefore we are handling people's money. So it depends on, sorry, my lights thing. I need to move around a little bit. Yeah, so it depends on, how much or what risk are you allowed to do? Because if you are handling other people's money, you cannot extensively, regardless of your high risk appetite, you cannot just go out and just expose your customers to various structures. And then also depends on people impacted. If it's life threatening, then obviously you're going to try it in a very serene environment where you've actually immunized it from various risks, and you try little by little. But if it's not people centric or doesn't impact human beings, you can actually probably try and have a much wider. But in the short answer to that, I mean, if you look at it from the Standard SC Ventures perspective, is that we have separated out the risk-taking or the technology risk-taking business, which is what I run here, and the client funding part of the bank. And then we then adopt new challenges and try them, make them go through a proof of concept or proof of value or minimum viable product framework outside the bank before we can then start ingesting it into the bank so that it can be applied in a secure manner where we have actually tested. It's almost like doing a vaccine. You test it out, and then since everyone's talking about COVID vaccines, you test out the vaccine on a small population, see how it works. Once you've found that it's effective, then you introduce it into the community. I would not advise somebody to try a very high risk product on his main enterprise framework, because then there is a risk that it might not work, and then that will collapse the entire business. So test, but immunize your core business. That's what I would say.
All right, thank you very much, gentlemen. I know we've run out of time. I wanted to hear some views from Yuko. We're right at the top of the hour. Maybe in 15 seconds, Yuko, anything you'd like to add?
Okay.
Close.
Enterprise-wide digitalization, please don't look at the procedure. Please don't start from the procedure. If you start from the procedure and digitize those parts, it's just a mechanical the effects you're gonna get. Go back to your company mission, and if you think that the best way to achieve those company mission is to digitize, just go digitization.
All right, thank you very much. And now, so I think we're over time, so I'd like to hand it over to the organizers, and thank you so much I'd like to thank our speakers so much for sharing some very good insights. Jack, Yuko, and Kennedy. I think audience, you'll agree that they've shared some really good, insightful ideas around this exciting topic. I think this is an area we could continue talking for hours, but for today, I think that's where we close this conversation, to be reconvened at another time. So thank you so much, speakers, and thank you to the organizers. Thank you to the Central Bank. And now I'd like to hand it over to the organizers. Over to you, Mark. Thank you.
Thank you.
Thank you very much for leading that conversation, Robert Nyama from Ernst & Young, East Africa. And indeed, it was an insightful conversation. If only we could have more time, one of the things that we don't have too much of. So I will take you straight to our next conversation, and that is on financial inclusion. Now, many would say and agree with me that Sub-Saharan Africa has had some success stories when it comes to financial inclusion, and even with all of that success, the great question is whether it has had impact on the people that need it the most. There are still various issues that prevent that from happening, such as consumer protection. And then came the COVID-19 pandemic. And so the big question now is, how can financial inclusion evolve to enable better recovery post-COVID-19? To talk about this and much more in the next session, which is financial inclusion post-COVID, talking about the lessons and the challenges. I now invite Tamara Cook. She's the CEO of FSD Kenya and someone who I would say is an expert or an authority on digital innovations and financial inclusion. She spent 7 years at the Bill and Melinda Gates Foundation, managing grants and loans that are supporting digital financial services, and has been at FSD since 2014. Now the Chief Executive Officer. Tamara, take us through this next session.
Great. Thank you. It's great to be with you and be part of this event today. We have a great group of people to talk about this very important topic of financial inclusion during COVID-19. What are the lessons and what are the challenges? I'm joined by Amlo Ngueno, who is the CEO of BFA Global, which is a consulting firm working on financial inclusion and many other topics. And Stanley Munyao, who's the CEO of Musoni, and he's been there for 4 years. And thank you to Stanley, who's joining us from leave to be a part of this important conversation. And we're going to start with my colleague, Anzatse Were, who's the senior economist at FSD Kenya, and she's going to start by giving us a bit of a context-setting discussion on this topic. So over to you, Anzatse.
Thank you, Tamara, and thank you, Afro-Asia FinTech Festival, for providing me with this opportunity to speak. So I think really the reason why this context setting is important is because of the implications for recovery in terms of not only financial inclusion, but also financial health. So I think if you're looking at the impact that COVID has had on countries like Kenya, I think there are really two stories that we're seeing happening. I think on the macroeconomic level, if you're looking at things like GDP figures or things like inflation figures, it looks like Kenya is demonstrating relative economic resilience. If you compare the contraction at which our GDP underwent in Q2 compared to some of our peer countries or even some of the larger economies, Kenya actually performed quite well. But actually what we're actually seeing from a perspective of financial inclusion and health is that, first of all, there are very, very, very deep differences in terms of the way different sectors have been hit by the pandemic. We have found that some sectors are being disproportionately hit, such as tourism, accommodation and food services, sectors such as education, transportation and storage, sectors such as trade. These have really suffered massive contractions. And the reason why that's important is because a lot of these sectors are very labor intensive. And so you're finding that a lot of people are finding that their incomes have really fallen off a cliff. That's the first big impact that we're seeing, is the differences in sectors. The second big difference we're seeing is gender. We're finding that women are being disproportionately hit, partly because the bulk of the sectors where women earn a living, such as trade, such as tourism and restaurants and even education, those are the sectors that have been really hit. But we're also finding that a lot of the policies that are being structured do not necessarily have a gendered view. The other big way women are being hit is because we're seeing elevated levels of violence being targeted against women and children during this time of COVID. So as a result, we're seeing there's one part of a story that's saying, there's resilience being demonstrated, but we're seeing that the disproportionate effect is one of devastation. If you're looking at job loss, we're seeing losses in both the formal and informal sectors. We're even seeing people who used to be economically active, maybe self-employed, now not being economically active. And the biggest issue that we're finding that particularly businesses are having, micro, small, and medium enterprises in particular, is a lack of demand. Customers aren't buying as much, customers are not buying as often. And that's partly because of the income shocks that those customers are having. And so we're seeing just this continued dampening. Even as we're seeing slow signs of recovery, it's not going back to the pre-COVID levels. So the big story, I think, if you're talking about an inclusion story, is we're seeing a lot of income divergence. The bulk of Kenyans, and I think many across Africa, have had their incomes completely decimated and are really in a survival mode of trying to do what they can to make some income. But on the other hand, we are seeing a very thin layer of Kenyans that are demonstrating resilience, that are either in sectors that are still ticking on or are in jobs that allow them to continue to earn a living. And from an economic point of view, we're seeing an economic dualism. So you're seeing some economic sectors that are demonstrating resilience. You're seeing things like ICT, you saw agriculture do fairly well. Then you're seeing the other side, which is many economic sectors that are just sort of really struggling to recover. And in terms of going forward, there really will be four main pathways through which we'll see recovery. Some will bounce back, some will turn out stronger than before if you're looking at sectors like the ICT sector that's relevant here, but there'll be some where there'll be very lengthy recovery and some may not recover at all. So when you're looking at headline inclusion, there are rising poverty numbers. I think the World Bank just released a report that in Kenya, there are about 2 million that have already sunk into poverty or at risk of sinking into poverty because of COVID. But the biggest story, I think, from our perspective in FSD is we're seeing a real hit in financial health. And we really measure financial health in three ways, which is the ability to manage day-to-day, the ability to deal with risks, and the ability to invest in the future. And because of the way Kenyans' incomes have been lost, a lot of people are either going without food, a lot of people are foregoing medical care, a lot of people are actually selling their assets. This includes business assets. So when it comes to recover, that will be a struggle. And a lot of Kenyans actually spending their savings as well as accruing new forms of debt. So I think I just want to, as I start wrapping up, I want to really look at the role of digitization and the role of technology and why we've seen the rise of digitization in the context of COVID. Obviously, COVID-19 is spurring digitization at a much faster rate, and there are really three main reasons because of this. Obviously, the social distancing protocols is one thing. I think the other big thing is that a lot of governments have encouraged a pivot to using digital channels such as mobile money. And also, because of these factors, the ICT sector is actually being seen as a sector that is more resilient, more prosperous. So we're almost seeing a crowding in effect in terms of interest, whether that's investor interest, development finance interest. So we are seeing this confluence of factors leading to that. But I think there are reasons to be cautious, and there are really four reasons. I think the first is different Kenyans and different businesses in Kenya, in Africa, have different starting capabilities in terms of their access to digital tools and in terms of their access to digital capabilities. So when we're doing this pivot to digitization, we have to bear in mind that there are many Kenyans and many Kenyan firms that do not have as deep digital capabilities as others. So there is an even playing field to start with. The other thing is to do costs, and I believe Dr. Presong mentioned it in her remarks. But what we're saying is that you need a certain amount of financial bandwidth to meaningfully leverage digitization. So whether you're a small firm or a large firm or a medium firm operating in Africa or in Kenya, you need a certain amount of financial bandwidth to meaningfully make a pivot to digitization that makes sense. So the risk there is that those with lower incomes or those firms that are not doing so well won't be able to leverage it. And I think finally, just the issue of digital skills, where it's not even across the board, either at firm or household level. So I think just in terms of a few ideas, as we're talking about recovery and how to make sure that recovery is inclusive, I think the first big thing is a lot of effort has to be targeted at low-income Kenyans. That is not necessarily where the market may want to play, but that is where the help is needed. I think if you're looking at it from a business perspective, any stimulus effort going forward should look at a way to build back demand so that businesses have customers again and customers can come back in and buy what they need. I think we also need to look at very specific policies to target feminized sectors or sectors where women in particular earn a living. And finally, I think we need to start looking beyond financial inclusion to financial health. So even as those responses, again, are being targeted, looking at maybe even the sectors that do need a bit more help than others. Because I think one thing that we've seen COVID tell us is that depending on where you are and where you're sitting, it will hit you very differently. So specifically because of that, I think digital finance across the board just needs to become a bit more affordable than it has been in the past. So thank you. With that, I'll end my comments.
Great. Thank you so much, Ansatse. That was a really helpful context setting. So I'm going to turn to the two panelists, Stanley and Amalo, and start with you, Stanley. Shortly after COVID hit, you and I had a conversation about how Musoni was handling the pandemic and how you were having to pivot your model and how that was going to work. And I haven't heard from you lately, so I'm looking forward to an update on how things have been going and how you've had to continue to pivot and change due to COVID-19 so that you can really serve the clients that are your bread and butter. That's who you exist to serve. But not only how do you serve them, but what have you learned from these pivots and these changes in interacting with your customers? So Stanley, welcome. You're still on mute, Stanley, if you could unmute.
Thank you very much, Tamara, and good to be in this panel and talk about the measures that Musoni has taken to cushion its customers during this pandemic. As we all know, really, the health pandemic plus the lockdowns that have been put in place have severely harmed, the livelihoods of low-income people in our societies. But even much more worse because their cash flows have been completely impaired and, survival has become more severe than in the past. So as Musoni, we looked at the role that we play in the financial inclusion space, being a technology-driven company that, promotes financial inclusion in the Kenyan market. So through that, we were able to establish that we are actually an essential service provider in Kenya, and our services were much more needed now than before. And we categorized, the key areas of focus into three. One is how to manage our staff. Secondly, how to manage our customers. And third, how to manage our external stakeholders, and especially those who provide funding to Musoni for purposes of extending financial services to the less fortunate or excluded. But for today, I'll focus on the first two, staff and customers. So we first and foremost made sure that all our staff are well taken care of, safely working from home, not really moving up and down in compliance with the government lockdown regulations, but still continue to reach out our customers from wherever they are through alternative channels. And that was well taken care of, and I'm happy to share with you that we've been able to take care of our staff all through the last 6 or 8 months of lockdowns. But the customers were the biggest challenge for the institution, noting that their continued access to financial services, both financial and non-financial, was much more needed during the lockdown periods when they could not trade, when they could not go to markets, when they could not, access, markets for their products and stuff like that. So we moved more into digital services just to make sure that we keep these customers engaged. And social media played a very key role for us. We do what we call group-based lending methodology. And we were able to put our customers in WhatsApp groups so that they can continue chatting and, getting to understand how they can access services, how they can access markets, and how they can get their issues sorted out promptly from Musoni. The other issue that we looked at more keenly was client protection, because we anticipated probably an increased level of client exploitation during this period of time. And fortunately, Musoni had just been smart certified by Microfinanza as a responsible institution within the financial inclusion space, and we wanted to make sure that our customers get to know their rights during these difficult moments. If you've got facilities that you're unable to pay, what are the alternatives that are out there? Can you get your facilities restructured? Can you get refinanced? And if you need access to more working capital, are you able to access those facilities? But more so also exposing them to digital training so that they are able to deal with their colleagues, with their peers, conveniently in a digital manner. And that, again, we kept them engaged all through. And I'm happy to say that if we look at the level of satisfaction of our customers, which we do regularly on monthly basis through, customer satisfaction surveys, we've seen a large increase in the level of satisfaction of our customers from an approximate of 60 to upwards of 80% due to just the engagements that we've been able to walk them through this period of time. Thank you, Tamara.
Thank you, Stanley. That's really interesting. When we were first speaking about this, you talked about the challenges of who had a phone, was it a smartphone, who had data, and I know you tested, you mentioned WhatsApp, I think you've also used Zoom for the digital training. How did it work? How many customers had a smartphone, or how did they need to share? How did you make that work for customers so that they could engage with you in this new way?
Yeah, approximately 70% of our customers now have access to smartphones, even though they are rural-based. And ownership of a smartphone isn't the biggest challenge. The bigger challenge is access to data bundles to keep them engaged. Because we do have customers even who constitute the 30-40% without smartphones, but they have access to a smartphone either from a relative, from their kid, or from a neighbor. So we engaged in an exercise of providing our customers, selected customers who are unable to get data bundles with bundles of approximately 100 shillings, Kenya shillings. That's about $1 when we want to engage them. And we knew it was an expense from our side. It was a cost when institutions are looking at how to minimize cost, but it was having a long-term benefit to the institution because through the Zoom organized trainings to our customers, through the WhatsApp group meetings that customers from the comfort of their homes could still convene as a group and engage with their loan officer, engage with their relationship officer in Musoni. That made the big change in it. And most even moving beyond provision of financial training or literacy training to even educating our customers and demystifying the COVID-19 pandemic for them, and emphasizing the need for them to stay safe, why they need to wear a mask, socially distance, and sanitize as frequently as possible, and keep most of what I would call unwanted visitors away from their homesteads. Approximately 50% of our customers, Tamara, are aged 50 years and above, and that means they are within that eye bracket that is potentially exposed to COVID-19. So this kind of training was very, very important for us to make sure that at least all our customers are safe and well taken care of. We were also tracking the level of exposure or infection rates on our customers throughout this period. And I would attribute this on top of what the government of Kenya has done to educate Kenyans about COVID-19. The concerted efforts that Musoni put in place are seeing a very low, probably, infection rate on our customers in our database that we've been able to pick. Because out of 75,000 customers, we cannot talk about less than 10 customers who have reported to us that they've been infected with COVID-19, all because of these concerted efforts that we've deployed.
Thank you, Stanley. Musoni has a reputation of being a digital-first financial service provider. And yet what I'm hearing is that it may be digital, but it's also very relational. The digital, and I know previously the model was digital plus physical meetings and, these meetings with the groups and with the relationship officers. But what I'm hearing is that you've even been able to leverage technology to make sure that relational aspect of your model is still very strong. Let's go to Amalo. Amalo, you have worked a lot in Kenya, but you also run a global firm and have worked on the topic of COVID-19 and financial inclusion across many countries. What can you share with us that you've seen? What lessons have you and your colleagues been learning during these crazy times?
So thank you, Tamara. I think Nzetse has actually mentioned quite a number of things that are common across the world, and just starting with that dual track recovery, that there are certain sectors that are recovering strongly, and we see that a lot in East Africa. The agriculture sectors bounded back, but in many countries there's this thin layer of the ICT digital enabled businesses that are doing quite well. Those include e-commerce, delivery, the whole set of new digital economy activities. And of course, obviously, there's tourism and travel and a set of other things that are doing, much worse. And I think now with the vaccine on the horizon, I think some of those industries are starting to gear up or think about potential recovery. But I think all the points she's made, and we've seen this again across the world, about people drawing down their savings, spending their assets, drawing their credit to their maximum amount, and also lacking some of those social connections that are incredibly important for low-income people, typically when they need money to cover a disaster or a shock, or if they need money to start a business, they borrow in their social network. And of course, the social network has also been drawn down. So people are therefore finding it harder to come back than from any shock that would just be individual to me. Nonetheless, though, I will say it's been quite encouraging to see that, as we mentioned, agriculture, which was very disrupted in the first days of the pandemic, rural markets and transport being disrupted, and I think quite a bit of concern about food security in rural areas, but agriculture returning pretty strong. And we've all learned, all urban people have learned what agriculture really is. But some of these informal sector activities, petty trade, small-scale manufacturing, small-scale restaurants, those are also coming back despite all those financial health hits that they've taken. So there is some possibly more buoyancy and resilience, in fact, in the informal sector than many formal enterprises. So I think there's certainly earlier we were very concerned that those sectors would fall behind, as government programs are all aimed at formal enterprises, formal financial systems, and therefore employees in the formal sector. I think it's still an ongoing concern, but the complete disaster that we really feared in the informal sector hasn't yet materialized.
Stanley, are you seeing similar differences in the sectors that your entrepreneurs are involved in? Are you seeing that some are able to bounce back a bit faster or some are struggling? Are you seeing this agriculture versus some of these other sectors in your customers?
Absolutely right, Tamara. One of the reasons why we've been able to remain a little bit stable is our heavy investment in agriculture, and especially smallholder farmers in rural areas who have remained relatively stable during this period of time. And that has also informed the direction that we as Musoni want to take into the future, dealing more with smallholder farmers, because the largest society has to feed, and they've got to get foodstuff which is produced by smallholder farmers, and the smallholder farmers need financial institutions that can support them, and that's where Musoni comes in Adi. We also have some sizable operation in urban centers where we deal with traders, restaurants, small shops, businesses of that nature, and those have been hardly hit to the level that we are looking at how to support them get out of their current situation, because most of them have lived on their working capital, especially during the lockdowns, and those businesses are completely shut. And a partner who can help them bounce back into operations is much needed today. Let me put it differently. We, from a macro point of view, we are talking about stimulus package for different players in the economy. For us, our view is a little bit different. We are looking at who's going to be there to support small-scale entrepreneurs who may not qualify largely for these stimulus package initiatives, but just need some little working capital to get their businesses back on their feet. And we are focusing on getting it right and ensuring that we play that critical role, so that together with other players in the space, including the government, we're able to get this economy back on track as soon as possible.
Can I just add something just to build on what both Amalo and Stanley are saying? I think one of the things that we are trying to unpack is what are the drivers of that resilience. Yeah. So on one hand, because I think the story now is that Africa is far more resilient. Kenya is far more resilient than we'd anticipated, and there's truth to that. But I think we're finding that there are two stories happening. I think one is that there has been an ability for those with certain sectoral exposure, existing digital or financial capabilities. There's been an ecosystem of factors that allow them to be resilient in a healthy manner, in a manner that has not compromised their welfare. But what we're also seeing quite worryingly is that there are people who look like they're doing fine, who look like they're getting food on the table, particularly women, who look like everything is fine, but it's costing them their business assets, it's costing them their savings, it's costing them forgoing their medical care, it's costing them missing meals. So you can look at the images that they're resilient, they seem to be ticking on just fine, but actually the question is, well, how much longer can that type of resilience continue before people really fall off a cliff and sink into very, very deep levels of poverty? So I think that's where, from an inclusion perspective, we really need to start getting to the details of that, so that the people who are demonstrating a resilience that's backed by healthy fundamentals, that should be encouraged. But by those who are demonstrating resilience that's very, very unhealthy and dangerous, the support can come in and give them the help that they need.
And if I could just add, I completely agree with you. And I think one of the things we're also worried about is that those people who are coming back may be coming back with a huge debt overhang. And that will make it more difficult for them to reinvest in their business and in employment and in growth. And yet, a lot of that debt is probably informal and invisible. I see Stanley smiling, so maybe you're seeing this, but maybe you're offering better alternatives to that high-cost informal debt as well.
No, Amolo, you are absolutely spot on this, and we've picked it up because, and the Central Bank of Kenya did communicate about, did provide a guideline around, credit reference bureau listing and all those things. So we are seeing it in the ecosystem that we are operating in, and more and more customers in our space are getting exposed into credit that is geared towards consumption purposes and not wealth generation. And inability to pay is prevalent, is increasing every other day. Those customers either end up being listed in credit reference bureaus, and if you're not careful or responsible enough, then you end up pushing them off the cliff that Aziz is talking about, of financial inclusion. So we need more of very financially responsible players in the market to recognize that the landscape has been different. And that customer who has got a defaulted loan from a mobile lender or a small amount of loan that is late doesn't mean that it was a deliberate default or late payment. It is circumstances and conditions that were harsh for them, and they need more support, pushing them towards the financial inclusion side other than towards financial exclusion in order to get them back on their feet.
Stanley, what have you seen in your own portfolio? Have you had to reschedule loans, or are you seeing repayments suffering, what are you seeing among your own clients and in your own portfolio?
Yeah, I mentioned earlier that we've seen a lot of impairment of cash flows from our clients who are business people. So when their cash flows are impaired, it means loan repayment becomes secondary, if not tertiary. So they've got basic needs. They need to place a meal on the table. They need to take care of medication and things like those. So we have seen lots of partial loan repayments. That has made that we consider restructures of facilities or refinancing of those businesses. But yes, so far we've restructured approximately 30% of our loan book in order to make it easy for customers to continue with their operations and under less stress. As I mentioned earlier, we are also SMART certified in terms of client protection principles. So we've been very careful on how we engage our customers during this period of time in terms of recovery and pursuit of loan repayments. And this has been done more in line with client relationship management, other than just going out aggressively to pursue your collateral and stuff like that. And this has made our customers appreciate the services that we are offering to them, and also come forward and give us better business proposals on how they intend to resume their businesses, or how they intend to stabilize their businesses as we now learn how to live with COVID in our midst. But one more thing that that we've gotten rid of entirely is Credit Reference Bureau, because out of 10 customers, approximately 7 or 8 are listed negatively in Credit Reference Bureau, and that won't help if you cannot extend services to them.
So I just wanted to say that I was pleased to be at the launch of the Smart Certification for Musoni. You were the first in Kenya to get that global certification. I think it was a good, it's a testament to how much you value your customers and really want to see them thrive. And what I'm also hearing is it's not about their willingness to repay, it's really about the ability. And this idea that you work with your customers to come up with payment terms that work for them and for their businesses and for their families, I think is a testament to Musoni. Amlo, we've been working with you over these last few months on the COVID diaries and the waves of different interviews, and we've seen different things happening in those diaries, interviews from kind of wave to wave. What are some of your takeaways that are kind of related to the topics we've been discussing of how that's changed over this period?
I think the COVID diaries is a set of interviews that we've done with people who participated in the Kenya Financial Diaries back in 2012 and 13, and they're mostly rural, with 30% or so who live in low-income areas in urban locations. And I think the first thing right at the beginning, when we interviewed them about their situation at the beginning of the crisis, I think at the time people were saying that everything is fine in the rural areas to a great degree. And one of the first things that really stuck out from the diaries was that rural families were struggling both with the market and transport disruption, but also because urban people had left the cities, and often without an income, and the children had come home, and so these families were trying to feed way more people than they were used to in an unplanned and crisis situation in rural areas. And at the time also we saw some really severe urban poverty because of job loss in urban areas, and that people obviously did not have farming to fall back on. So I think that was an insight into really the depth of the crisis. What we also learned at the time, some of the things that have now become well known and obvious, like Nzetse mentioned about the burden on women, the worries that families had about girls going back to school when the schools reopened. The families were very worried that their girls will be less likely to go back to school, and also worried that their teenage boys would kind of drift off the right path and into trouble. So I think subsequently it's been much clearer how hard that burden has fallen on women, and the dangers of and difficulties of bringing children at all back to school, and high school girls in particular. And then as the crisis has developed, we have seen some of that recovery that I talked about, some of it because rural areas have maintained production, have been able to have access to markets, and because urban people have tested out new ways of making a living, even in this depressed economy. I think we will still learn more when we are finally able to meet them in person, which we're hoping for mid of next year, about their financial profiles. I mean, obviously their financial health has been severely dented, but in terms of financial instruments, what have they actually been able to do that has enabled some of that resilience? And then we've also seen that different areas are different. I think that's the urban Nairobi, it's recovering faster than certain of the rural areas or the coast, which is very tourism dependent. So that type of research has really allowed us this in-depth view into a widespread and partially rural perspective, and it's certainly it reinforces what we also learn from other types of surveys.
And can I just add to both? I think also what we're seeing is that financial health and financial inclusion will have a material effect on the quality of human capital going forward. So because a lot of incomes have been hit and because people are foregoing medical care, I think the ability of Kenyans to continue being productive, even when the recovery happens, we need to monitor that quite closely. But on the point about education, which is very important, a lot of the savings people have eaten into are the education savings for their children. So beyond, sort of the issues of Molos have raised, which is around, will kids be able to go back to school? The question is, will parents be able to finance it? And in some of the work that we're doing a survey on low-cost schools in Kenya, schools that charge about 30,000 a year, and their biggest concern is that even if they're open, parents will be able to pay the fees. And most of those schools run off of the school fees. So what we're actually going to see going forward may be a big crisis in the education of children because of how you've seen savings deplete and sort of the accrual of debt going forward.
Great. So we've had a fantastic conversation so far. Any last thoughts before we kind of move towards wrapping up? Stanley, anything from you? You're on mute still.
Yeah, I think for me, what is important, and for all of us, especially those who are supporting the bottom of the pyramid, small-scale entrepreneurs and businesses of that nature, is really to remain open and continue offering the services that are needed by these customers throughout this period of time. Then look at how you can provide relief to these customers, one way or another. It could be moratoriums, it could be restructuring of their facilities, it could be top-ups, refinancing. Let's think about all these things. And as Eze says, where else it looks gloom, it's very easy for these customers to bounce back if they are just given the platform to fix working capital needs for their businesses. Institutions of our nature will need to increase their liquidity and deploy more funding, especially in rural areas and informal settlements in Nairobi, and that will trigger, or spur some economic activity within that space. And then we're looking ahead to recovery, all of us. And if we can support each one of us in one way or another, then we should all be able to bounce back sooner than later. Thank you very much.
Great. And Sensei Yamalo, anything else to add as we wrap up?
Yes, I was just going to say something about digitization because of the role that digital, particularly digital finance and mobile options are offering people. Just people should, while developing those strategies, just bear in mind that people have different starting capabilities in terms of the access to digital tools. And just to the point Stanley made, that we've seen is that people's financial capabilities are really going to determine whether they can meaningfully interact with any of the solutions that are being provided. I think it's very important for firms to look at their pricing strategy, keep things as affordable as possible, and then finally, I think really looking at the digital skills and the ecosystem to allow the low-income Kenyans to leverage those.
Great. Amalo, any last?
Maybe just picking up on what Anzetse said, I think that we have seen this big wave of digitization, regardless of the starting point, but across many countries, and Kenya may be in the leading ones. And I think we need to track and manage, in a positive sense, the benefits that we can get out of that as the economy returns to growth. It won't be the old normal. I think we've spent at least a year by the time we released from some form of lockdown. And we should take full advantage of that digital opportunity, new digital skills. And I would love to see some direct government stimulus for this lower income, informal sector, small scale businesses and individual micro entrepreneurs, not just in Kenya, but across Africa. Government stimulus has been way less than in many countries, and it would be great to see that jump up and boost the recovery.
Great. Well, thank you for an excellent conversation on financial inclusion, the challenges and the lessons that we've learned. I think there are many themes that came out, but I think a couple that stand out to me are the power of digital, but also how that needs to be managed in a way that we recognize where people are coming from and how they are set up to take advantage of that. The way we can use digital in new ways, as Stanley told us about when they helped make some of their relationship management go more digital, and how different sectors, different parts of the economy are going to come back differently, and more, as Amalo has just said, the informal sector, the micro and small and medium enterprises, those who are the least advantaged are going to need more help, and we hope that financial inclusion can be a part of that story. I would like to congratulate the government yesterday on the launch of the credit guarantee scheme, which is targeted at micro, small, and medium enterprises. And I'd like to end by just thanking Amalo, Stanley, and Nzatse for your wisdom. And thank FSD Kenya, as you may know, is an independent trust here in Kenya. We're part of a network of FSDs across Africa. And we thank our partners who made a lot of the research you heard about today possible, which is the Bill and Melinda Gates Foundation, Swedish SIDA, and UK Aid. So with that, I think we will thank our colleagues at the Central Bank of Kenya and Maz for inviting us to have this conversation with you, and we hope you found it as useful as we found it interesting.
Thank you very much for that great conversation, Tamara Cook, the CEO of FSD Kenya. And we carry on. I just want to give you a quick reminder that our time here over the last 3 days will be closed by the President of the Republic of Kenya, His Excellency Uhuru Muigai Kenyatta. He will be closing out our time here, and we'll also get to hear once again from the Governor of the Central Bank of Kenya, Dr. Patrick Njoroge. That is all coming up, so please stay with us here. You'll want to hear their remarks as we close out our time with you here, coming live from Nairobi, Kenya. We want to move the conversation onward and to now hear the remarks from a man who's been a global leader on sustainable development, climate resilience, and international cooperation. Speaking now on inclusive digital finance for SMEs, ladies and gentlemen, Mr. Achim Steiner, the United Nations Development Program Administrator.
Ladies and gentlemen, dear colleagues, it is a great pleasure to join this year's Singapore FinTech Festival. The event comes as the devastating socioeconomic consequences of the COVID-19 pandemic are still reverberating across the globe. This year, the world has witnessed an unprecedented acceleration in the use of digital technology. As the pandemic hit, the United Nations Development Program was on the ground in 170 countries to help with the application of e-health and e-government platforms, as well as a range of digital solutions to ensure the business continuity of governments. This was helped by having a digital strategy already in place. We saw how governments turned to the power of digital finance to provide vital cash transfers to people unable to leave their homes, providing a lifeline to businesses, jobs, and livelihoods. The pandemic hit small, medium-scale enterprises and informal workers especially hard, many of whom lack social protection or healthcare. With SMEs in the formal and informal sectors representing 70% of jobs worldwide, how SMEs are able or not able to weather the crisis will be critical to the global recovery and to make progress on the Sustainable Development Goals. As part of our role in leading the United Nations socioeconomic response to the pandemic, UNDP is supporting the entrepreneurs, small businesses, and workers of the world. In Uganda, for example, we teamed up with the online shopping platform Jomaya Food to launch a new e-commerce platform to keep SMEs in the informal trade sector afloat as the country went into lockdown. And UNDP is also working with communities to surface and scale up new solutions, including through the UNDP Accelerator Labs network that now serves 114 countries worldwide. To give just one example, our Accelerator Lab in Argentina helped to create a pay-in-advance platform that allows people to pay for services they will receive after the lockdown, supporting SME cash flows in the meantime. Yet, digital connectivity is fast becoming the global metric of inclusion and exclusion, with 3.6 billion people still unconnected. There is also a clear digital gender divide. In low and middle income countries, 433 million women are as of today unconnected. Women risk increasingly being excluded from the potential of the digital economy. So as digitalization accelerates, there is a critical need to ensure access to affordable broadband, the nervous system of today's new civilization. This connectivity is critical when it comes to digital finance. And a report by the UN Secretary General's Task Force on Digital Financing of the Sustainable Development Goals, entitled "The People's Money," points out that digital finance holds enormous potential to expand financial inclusion by empowering citizens as savers, investors, borrowers, lenders, and taxpayers. If we give people more choice over their money through digital finance, we know that they will invest in critical areas like the green economy, boosting job creation and inclusion. Indeed, digital finance could drastically reduce poverty and inequalities. In Kenya alone, some 200,000 households have been lifted out of poverty thanks to mobile money. The fintech revolution is also helping SMEs across the world to access loans. Previously, many of them were deemed to be too high risk. In particular, big data and analytics can rapidly accelerate the delivery of the 5.2 trillion in annual financing needed by SMEs in developing countries. At UNDP, we are helping countries to build forward better from the pandemic. A key part of our support will be working on digital disruption. Drawing on the UNDP digital strategy, our efforts will include engaging with digital payment and e-commerce systems with a focus on supporting women-run SMEs and closing the digital divide for marginalized populations. Indeed, UNDP and the UN Capital Development Fund have launched a new joint offer on digital financing. In concrete terms, that includes helping governments to create new digital financing strategies that create an enabling environment that will propel SME growth. We're also advancing a dialogue on the governance of global digital finance platforms in recognition of the cross-border impacts that these payment and dominant players will have on the SMEs across the world. The intersection between the international community, the private sector, and digitalization is key. To this end, UNDP, the United Nations Global Compact, and the International Chamber of Commerce have teamed up with major players in the private sector, including DHL, Microsoft, and PwC, to launch a new initiative called Recover Better Together, a COVID-19 private sector facility. The initiative recognizes the pivotal role of the private sector in driving the socioeconomic recovery. In particular, it will help women businesses to get back on their feet and apply digital solutions to adapt to the new COVID-19 economy. Some of our initial projects will focus on Turkey, Ghana, Colombia, and the Philippines. And today, I'm also very pleased to announce an important new partnership with the Monetary Authority of Singapore to help integrate SMEs in Africa into global value chains and to accelerate digital finance in the region. We are combining Singapore's unique position as a global digital finance hub with UNDP's extensive local presence, where we work with communities on a day-to-day basis to implement the solutions that they need. Taken as a whole, I'm excited by our bold efforts to help countries fully harness the incredible power of digital finance underpinned by fintech. And I truly believe that fintech will serve as a high-speed connection to that greener, more inclusive, and more sustainable future. Thank you very much.
Thank you very much, Mr. Achim Steiner from the United Nations Development Programme here in Nairobi. A quick reminder that we are deeply honored to have the President of the Republic of Kenya, His Excellency Uhuru Kenyatta, who will be closing out our session. So we're looking forward to that session. Please do keep it here for that. But first, a very important conversation on the impact investments, green investments for the financial sector. And to take us through that conversation now is Juliana Rotich, who's a tech entrepreneur and strategic advisor. She's based here in Nairobi, Kenya. She's a venture partner at Atlantica Ventures. It's a venture capital firm that invests in African startups. Juliana?
Hello from the Green City in the Sun, Nairobi, Kenya. My name is Juliana Rotich. I'm venture partner at Atlantica Ventures and a technology entrepreneur. I will be your moderator for today's session on green investments for the financial sector. Thank you to everyone who has joined this session. Welcome. We have a great group of panelists. As I prompt each of them to briefly introduce themselves, I would ask that they share what is their favorite thing about the country they're joining from. It can be anything from the use of green energy, financial inclusion rates, country resilience in the face of COVID-19, or even baby elephants, whatever is interesting and your favorite thing about your country. And in the chat, please do share with us which country you are joining from and your favorite thing about it. We will start with Anne-Marie Chidzero. Welcome.
Thank you very much, Juliana. It's really a pleasure for me to be here. My name is Anne-Marie Chidzero, and I am the Chief Investment Officer of FSD Africa Investments, which is the investing arm of FSD Africa, a facility to support development of the financial sector, and we're funded by the UK government. And I'm here in Kenya, in the beautiful country of Kenya, and what I have to say, what I love about Kenyans, besides the fact that you have a beautiful country and wonderful coastline and wildlife, that the Kenyans are really resilient and really taking on the challenges that we're facing today with the pandemic, but also just willing to do what is necessary to address the changes that we need to make as we green and create more sustainable economies. Thank you.
Great, thank you very much. We'll move forward to Kay Brathwaite.
Hi, good morning. Kay Brathwaite here from the sunny, beautiful island of Barbados. I am the CEO of Invest Barbados, which is the government's statutory body which look for sustainable investment into the country. And what can I say I love about Barbados? Everything, basically. It is a wonderful place to live, work, and play. So basically, we do have it all down here. I mean, pandemic aside, we've all have the impact of the pandemic with the various sectors, and you'll hear me speak about that later on. But, you know, all in all, I think we handled it pretty well. I think we were able to keep our numbers down and to still allow our citizens to still enjoy life and even invite people to come and enjoy life in Barbados. So it is a wonderful place to be at this point in time, and glad to see everybody on the panel and looking forward to chatting with you as we go on. Thank you, Juliana.
Thank you very much. And Peter Sullivan, where are you joining us from?
Hi, Juliana. I'm coming from London, UK. I am the head of the public sector business for Africa at Citibank. So work with sovereign central governments and developmental organizations looking at particularly sustainable finance. Can't really point out one thing I love about the UK, other than it's never boring, at least from a political point of view, as we jump from one political crisis to the next, whether it's COVID or Brexit. So the newspapers are always quite interesting.
Fantastic. And last but not least, Wycliffe Shamia, welcome.
Thank you, Juliana, and all who have joined us this afternoon. And I am the CEO, Capital Market Authority, a regulator of capital markets in Kenya. I think I want to say thanks to Central Bank for inviting some of us to be speakers today. But just to say, as we speak about resilience, I think I'm so happy to see our capital markets being resilient during this time of COVID. I can tell you, if you went by the measure of activities at the exchange, it has been wonderful, although obviously some slides, but I think generally from expectations, we've done very well. The market has remained very resilient, although also, we depend on foreign investors, but we have seen them, of course, participate even at times when it was very difficult. Thank you, Juliana.
Thank you very much. To introduce the session, one of the things that we have seen is that over the last decade, we've seen an evolution of banks and corporates aligning their business with sustainable development goals and redefining the idea of corporate social responsibility. There are various examples in Kenya, from Safaricom to Kenya Commercial Bank, releasing sustainability reports that show benefit to society. And the conversation around environmental, social, and corporate governance is now a global one, and it's a continuing conversations. In some of the reports that we see, not only in Kenya, but globally, there are specifics about green investments and green financing. We see companies being very clear about their impact initiatives, how they're empowering individuals and businesses to align with goals. There is welcome news of Kenya Commercial Bank getting Green Fund accreditation and IFC allocating money for green finance small enterprises. So the sources of green investments into the financial sector are local, regional, and international, or a combination of all three. Underpinning all of this is the partnerships that span DFIs, telecoms, banks, fintechs, and governments to help drive the flow of money, action, and hopefully impact. So let's go to Barbados, and I'd like to welcome Kay Braithwaite. So considering the Sustainable Development Goals and the current global crises, what are the opportunities to make green investments in the financial sector on a country level in the case of Barbados? Welcome.
Thank you very much, Juliana. Obviously, protocol having been established, it is a very pleasant day to you. It is very, very early in the morning in Barbados. It's around 8 a.m. Thank you to the organizers of this summit, and by extension, the Singapore FinTech Festival, for providing a virtual platform where countries across the globe can collaborate on issues vital to the continued development and success. Thanks for the invitation to Invest Barbados to participate and to share how our investment landscape is shaping up amidst the current global crisis. The ongoing pandemic has impacted the entire world. We too in Barbados continue to manage the risks. To date, there are no cases of community spread, and our borders have never closed, with Barbados maintaining a welcoming climate to live, work, play, and invest. Although our major economic earner, tourism, has been severely affected, I am pleased to report that Barbados' global business sector, which contributes significantly to the country's gross domestic product, has demonstrated resilience and performed reasonably well under the circumstances. In fact, for the first 9 months of the year, our central bank's review of the Barbados economy reported substantial revenues gains from the corporation tax. Additionally, to counter our tourism losses, our government has introduced the 12-month welcome stamp visa, inviting visitors, so all of you are always welcome, especially digital nomads, to live, work up to 1 year in paradise. The program has proven to be popular with the global business community and is a reminder that Barbados is much more than just a tourist destination. The entity that I lead, Invest Barbados, is an economic development agency of the government of Barbados, responsible for attracting foreign direct investment, collaborating with public and private sector partners to develop and manage our business brand. Our major focus is to deliver value to our investors, and in doing so, prioritize the landing of investments that are sustainable, feasible, and ecologically sound, for those which will create quality jobs and bring transferable skills and new technologies, investments that enhance the economic and social development of Barbados. Though faced with the uncertainties of the global pandemic, Barbados remains open for business, more specifically for businesses of substance. We are a welcoming jurisdiction that has consistently built a reputation underpinned by transparency, stability, and compliance based on a country brand that symbolizes excellence, productivity, imagination, and innovation. Our global business sector is among the bedrock of our economy, bringing foreign direct investments to our shores, creating employment, generating revenue, and enhancing the social well-being and quality of life of our people. The sector continues to stimulate economic development and provides access to advanced skills and technology, generating mutual beneficial impacts for the investor as well as Barbados. Our landscape remains attractive and ripe for foreign direct investment, spanning the traditional sectors such as financial services and information communication technology, to the emerging such as financial technology, medical tourism, renewable energy, and niche manufacturing, as well as yet untapped areas including artificial intelligence, medical cannabis, and other high-value agro-industries, the management of life sciences, culinary sciences, robotics, data and cloud engineering, cybersecurity, e-health, and e-education. We are aiming to be among the best and will continue to attract investment that helps propel our pursuit of sustainable development. One of the sectors which typically attracts impact investments here is renewable energy. Barbados is committed to the ambitious goal of 100% renewable energy by 2030. The impact would lead to significant savings in foreign exchange, while contributing immensely to improvements in the health and well-being of our residents due to the reduction of carbon emissions. According to the Central Bank of Barbados, the country spent over US $364 million in the importation of fossil fuel products in 2019. This is simply not good enough. Formal recognition of green policy objectives in Barbados can be traced to our National Strategic Plan 2006 to 2025, but efforts have predated 2006 as well. According to the United Nations Environment Programme, in 2002, Barbados saved 15,000 metric tons of carbon emissions and over 100 million US from the 35,000 solar water heating systems installed at that time. As of 2008, approximately 40,000 solar water heaters were in operation in Barbados, and this number has increased yearly. Presently, approximately 60% of our householders have solar water heaters, and the country is ranked 5th in the world per capita in solar power. Barbados remains number one in the world in the British thermal unit solar water heater capacity per 1,000 population. So what can we say? Small in size, but big in impact. More recently, Barbados has geared up on the solar PV installations. Government has a solar PV installation on many of its buildings, including its schools. Banks and other financial institutions offer loans for such installations. You may be pleased to learn that Barbados is a global leader in the per capita use of electric cars, and leads the Caribbean in the introduction of electric buses into its public transport fleet, saving thousands of dollars in fuel consumption, while considerably reducing the level of carbon emissions into the environment. In terms of green financing, Barbados has had some success there. At least one investor, who is one of the largest independent power producers, launched a green bond program and continues to expand this program. These bonds have earned regional and international recognition. You can find more information at https://williamscaribbeancapital.com, Green Energy Projects. Several leading experts agree that the outlook for impact investments is positive. This clearly substantiates my earlier statement, the tremendous investment opportunities that are potentially available to small developing states like Barbados. In summary, Barbados is seeing growing interest in the areas typically associated with impact investment. You have renewable energy, agriculture, food security, education, healthcare, the environment. We are seeing interest in the investments that enhance lives and livelihoods. As a small open economy, Barbados recognizes that attraction of sustainable FDIs will be integral to our success, and we are actively aiming for recovery and robust growth post the COVID-19 pandemic. Ladies and gentlemen, Barbados is open for business and offers a welcoming investment climate. You are invited to consider Barbados. Thank you very much.
Thank you very much. And I'd like to welcome Anne-Marie Chidzero. I think you'll agree that we all cannot wait to come to Barbados.
Yes, definitely. I'm coming.
Yeah. In your stellar career of building financial markets, do you see this trend of aligning business with impact imperative continuing, and specifically around green investments in the financial sector? What are the frontiers that you are seeing or looking forward to or would like to see more of?
Thank you very much, and I really will be brief. Yes, we are seeing the interest in the financial market and in the investment capital landscape, a keener interest in greening. And I think COVID-19 has really allowed all stakeholders to really come to the table and be much more conscious about the need for sustainable development, the need for greening our economies. What we're doing at Financial Sector Deepening Africa and with the investment arm is we are looking at finding ways in which we can attract more capital into this space. So really demonstrating the investment return that can be made not only financially, but in terms of the impact on the economy and how that creates more sustainable development. So we're looking to invest in different types of structures that would help blend the investment return, so it would therefore attract capital that is looking for opportunities to invest in green, but they have also a particular mandate that they need to kind of stick to in terms of the returns that they're looking for. And so we're looking at different ways in which to structure platforms to attract different pools of capital into green. So when I say green, it could be energy, renewable energy, cook stoves, for example. It could be conservation. Here in Kenya, as I said at the beginning, beautiful, absolutely beautiful natural landscape and wildlife. How do we protect that? COVID-19 certainly had a huge impact on the economics of conservation, but how do we protect that? How do we make this an asset class? That's really what we're looking for, is to make green an asset class. So not only is it about greening finance, it is about financing green. And I'll stop my comments there. Thank you.
Thank you very much. And I'd like to now invite Mr. Wycliffe Shamia. Are there opportunities that you see for this idea of not only financing green investments, but then also figuring out interesting instruments in order to be able to make this an asset class. Do you see this being a bottom-up movement, or will we continue to see it being top-down, where resources cascade from multinational funds, or are there local innovations or partnerships that the Capital Markets Authority is seeing or wanting to encourage? Welcome.
Thank you, and a very good question as far as we are concerned here in Kenya. First, just to state that even with the effects of COVID-19, I think in a normal environment, a lot of assistance will be expected because, as you said, economies have been destroyed by the effects of this pandemic, and therefore, even as it comes to financing green, we will still expect a lot of assistance or aid moving from the very huge sources, pools of funds. I know, of course, we have had Green Climate Fund, we have European Union, we have Global Environment Facility, World Bank, among so many others. This will be very necessary because I think as it is practically where we are now, the effects of COVID-19 have actually destroyed so much of the progress that had been made before. But let me just say, after Paris Agreement in 2015, of course, we've had our Marrakesh pledge in Morocco in 2016, where regulators in capital markets and the exchanges came together and agreed it was necessary to stress the issue of environment when entities are raising funds, because we understand the issues of environment must be handled or addressed collectively. And therefore, I can say here in Kenya, we have had so many initiatives under different umbrellas, just looking at how do we grow green? And one of those is around how do we support the green bond market in the domestic, of course, bond market. And I want just to mention around two initiatives, and then I'll talk about what we have done as an authority. The first one being Green Bond Program, which brought together Kenya Bankers Association, Nairobi Securities Exchange, Climate Bond Initiative, FSDA, and FMO, and others like IFC and World Bank, just to come up and say, look, we can have an issuer guide to help those who are interested in issuing these instruments. And of course, to support this, the authority had to issue a policy note guidance so that this is actualized. And as we speak, I think it's important for me to mention, early this year, we had one of the first corporate green bond issuance by Akon, which is now listed on Nairobi Securities Exchange and also the London Stock Exchange. This was a very big achievement for us because I think it just shows the potential and how we can all think about green and, of course, finance specific aspects that will go into contributing to what we are saying, saving the environment. Now, as you will understand, normally the push should be about green, but I agree with Anne that the issue of return comes in. And I want to be very specific in this case to say our experience has been there is also very great interest from the local investors because one, they see it is a good initiative. Secondly, of course, they are looking at returns. And the push has been, can we see more instruments being issued? I'm hoping in a few months we will have this as we go forward. I wanted to talk about one which is being pushed by the government, the National Treasury and Planning has put up a National Green Bond Committee just to oversee progress in terms of if the government is doing some sovereign kind of issuances. And we are all discussing this. It's a very hot debate around here. Should it be actually local, or should it be also shared with foreign? So you can see the kind of interest that we have as far as the green bond, of course, issuance are concerned here. But just to stress, as Capital Markets Authority, we have facilitation in terms of how do we look at applications and fast track those applications so that those who are raising funds and those who are willing to give those funds find it more convenient, and therefore supporting the green bond market generally in Kenya. As I finish, because of time, I just wanted to mention a few other arrangements which will be within capital markets, but I agree that within the financial sector, there will be many other initiatives. The first one will be Sustainable Stock Exchange Initiative by UN. I think this has been great, and of course, we know we participate at different levels. There is also a Sustainable Banking Network, which is under IFC, again, a very good initiative that we see a lot more of the jurisdictions participating in. I want to speak about IOSCO Sustainable Finance Network, which gives a bit of guidance to us regulators within capital markets on how we need to handle issues around green bonds and green finance. And then lastly, the Network for Greening in Financial System, which is mainly around banks. So for me, I think our experience has been great, and we are looking forward. In fact, we are really very keen. The government may issue a sovereign bond. We have had these discussions, and even we seem to see this can also go into Islamic finance, which is important for us. Let me stop at that. Then, of course, we can pick any other discussions thereafter.
Thank you very much. I'll turn to you, Mr. Sullivan. From the panelists, we're seeing a very hopeful and a really clear case for more investment in green instruments. What are you seeing in terms of large institutional investors? Do you see this attention, or do you see what is accelerating in terms of actual investment? What are the barriers? And sort of like from an ESG perspective, just a quick overview from your perspective.
Thanks, Juliana. I wanted to focus on the sustainability bond market because I think that highlights a number of key trends around sustainable financing, which I think are important for the region. And then, really how the region should be reacting to that in order to really mobilize much more sustainable capital. So just last month, the sustainable bond market surpassed 1.1 trillion in bonds outstanding. In 2020, year to date, there's been $460 billion of sustainable bond issuance. And that has been broken down by 50% in green bonds, 30% on social bonds, 17% on sustainability bonds, 2% in sustainability-linked bonds, and 1% in transition bonds. Now, from that breakdown, I think you can draw a few conclusions. One is, the recognition that climate change, renewable energy has been the main driver for green bonds. And green bonds were really the pioneer in sustainable finance. But with the arrival of COVID, there's been a much greater attention about social bonds and sustainability bonds, where there's a recognition that we need to attract this capital into funding SDGs. Now, green bonds will still remain a very key proponent because you're starting to see central banks, portfolio managers, pledging to have carbon neutral portfolios. So there'll still be a very big piece related to environment into renewable energies as we sort of transition of that. But that is also very much focused on the developed world. I think when we look at the emerging markets, it's much more about social, it's much more about sustainability and sustainability linked. Now, what's interesting about sustainability linked, and the definition of there is really where you have bond issues that will sort of move the price based on whether the issuer can meet certain key performance measures or indicators. So it becomes very, very much about measuring that impact and disclosing that impact. Now, I think what's important for Africa, when we think about there's $30 trillion of capital that is focused on ESG, but so little of it actually is flowing into Africa. Now, we're starting to see the headwinds again around sustainability and the social focus and the impact there. But I think what that capital requires is data. And we talk about data as being the new oil. So how do governments, how do issuers in Africa begin to monetize data? Well, first we need to capture that. So we need to build out the digital framework to ensure that the data is properly and accurately captured. So it's managing that data. Second, it's contextualizing that data. So when we think about, a point in time about impact, people look at where's the track record, how can I use this data to predict the future? Well, typically you predict the future by looking at the past. Now, right now you would say, well, there hasn't been much track record. But if you think about the work of the DFIs, you think about the work of donors over the decades in supporting supply chains and building infrastructure assets, they can contextualize that data based on the impact assessments they've always done as part of their mandate. So we need to sort of galvanize a lot of that history, a lot of that track record, to then put into current data capture to begin much more predictability around how the sustainable finance will allow these assets to sort of perform. And then thirdly, it's really the disclosure. I think COVID has again thrown into stark relief the need for greater transparency, the greater for accountability. And it's that data disclosure about disclosing impact, that will deliver that. So I think for Africa to really tap into ESG capital to fund SDGs, it really needs us to be focusing on the data capture, the data disclosure, because data will equal dollars going forward. And I'll just stop there.
Thank you very much. I think we only have just a few minutes, and I'll invite for us to do just there's one question from our audience from YouTube. One of the questions is, what are we doing to fix the problem of unemployment among youth, particularly around how when we're investing in companies or green space, do we have an indicator of if those companies are employing youth, and how do you see that being solved for? Because we have just 3 minutes, I'll invite in this order Peter to just do a closing statement, and if you'd like to answer the question, or and then we'll go to Wycliffe, Anne-Marie, and we'll close with Kay Brathwaite. Go ahead, Peter.
Sure. I think job creation is so essential, really, to the growth of the region, and it cuts across so many different SDGs, whether we're talking about education, whether we're talking about industrialization. And I think that needs to be a very key KPI going forward. For people who are looking to invest in projects, invest in businesses, that KPI about job creation, about capacity building, institutional resilience has to be there and put up into the forefront.
Mr. Shamir?
Thank you, Julian. For me, I think as far as employment is concerned, for us, if the real economy is working and economy is moving forward, especially there is then the required funds that will need to be raised. If we are raising most of these funds, be it through green bonds, we increase activities which then can bring about potential of more people being employed. But particularly, I think it must be something that runs through our mind, that we need to deal with this as nationals. I think at government level, I think it must be a push that the youth need to be assisted in getting the right employment. And of course, this comes back to what is the role of the private sector and the government as we think about this being an issue which is in most of the jurisdictions. Thank you.
Brilliant. Thank you very much. And
I know we're running out of time. Yes. So I think the only thing I would really add to this conversation is we do really need to look at the youth as entrepreneurs as well. And I think if you look at the startup environment, the accelerators, the average age of people who are in that space are the youth. And so we do need to make capital work for the youth. So that means trying to figure out how do we create the intermediaries and the institutions that are going to provide them with the capital so that they can create their own opportunities.
Yes, and what I would say is, yes, indeed, any investment coming into the country, we always look at those job creations and beneficials to our citizens. And of course, you look at re-educating everyone in terms of the new emerging sectors, and the youth will drive that. So definitely, they are always top of the mind: education, sustainable investment, re-engineering, entrepreneurship. Those are the words that we play around when we talk about bringing in investments, especially into these new and emerging sectors, and especially into the green and investments.
Thank you very much. I hope that everyone that joined us today enjoyed our conversation. Thank you so much to all the esteemed panelists. Thank you to the Central Bank of Kenya and the Monetary Authority of Singapore for convening this. It's been really great, and I hope everyone was able to have an important takeaway. I think for many of us, we're going to be looking at the green bonds. We're going to be looking at the ways that FSD is investing, and also the ways that Citi is also investing in ESG activities. And last but not least, we will one day come to Barbados as soon as we're able to safely travel. The digital nomad visa is, I think, very attractive to all of us here. Thank you again, and over to you, Central Bank.
Thank you very much, Juliana Rotich, for taking us through that conversation. And we are coming to the tail end of our time here with you from here in Nairobi. And I have a few announcements to make just before we get to hear from the head of state, that is His Excellency President Uhuru Muigai Kenyatta, the President of the Republic of Kenya, who will be closing out our time here with you. But I have got a few announcements to make before we go. So even though our time here with you may have come to an end in just a few minutes, the Singapore FinTech Festival continues, so you want to take a look at that platform. It continues until the 11th of December 2020. And in fact, it is at that point that you will get to see everything that's happening with the hackathon. So a quick reminder that the Central Bank of Kenya held a virtual African hackathon 2020 in August of this year, and that drew 74 submissions from various countries. 14 countries from Africa, Europe, and the Middle East. And the overall winner of that hackathon was SME Credit Pro from Cameroon. And they will be participating in the Global FinTech Accelerator that is taking place at the Singapore FinTech Festival platform. Like we told you, that goes on. But then that happens on the 10th of December, that is tomorrow. For those of you watching from this part of the world, it'll start at 7 a.m. until 9:30 a.m. That's 7 a.m. East African time. So you want to look out for that. Once again, a reminder that the SFF carries on, and the Global FinTech Accelerator will be happening on that platform. That is tomorrow at 7 a.m. East African time. So please do look out for that. Remember, we also showcased many of the finalists of that hackathon here throughout the 3 days we have been with you here. What would an event like this be without our global partners? We want to say thank you very, very much to our platinum partners, KCB Bank, Huawei and Safaricom, and our gold partner, Standard Chartered Bank. Let's hear from them now.
My name is Fena Auma. I am 12 years old. I live in a village near Mombasa in Kenya with my mother, father, and my brother Michael. But my sister lives in another city for school with my grandma. They are far, far away. Sometimes I feel alone. I love them and I miss them. Everybody is talking about the new train in town. I can't wait to take it with my family to see Grandma and my sister. In Kenya, we never give up, even when life is hard sometimes. We always remember to take care of other people, to say to each other, Hakuna Matata. One day, I want to find a good job to help my family and other people who need me. Every year, there are thousands of wildlife traveling from one place to another, passing through some dangerous challenges. But thousands of new lives are born on their journey. Just like these wildlife, we travel for a better life as well. It's a great journey indeed.
And so to just give you a brief recap of the day we have had here today, we have discussed a number of issues, including responsible digital leadership and governance. We've talked about the importance and the evolution of financial inclusion in the wake of the COVID-19 pandemic, and finally looked forward to sustainable financing and green financing at that. And so that caps our 3 days here with you. We have been so honored to be part of the global Singapore FinTech Festival, part of the over 40 cities around the world taking part in this. And that could not have happened without the collaboration of the Central Bank of Kenya and the Monetary Authority of Singapore. And just to remind you once again that the Singapore FinTech Festival carries on up until the 11th of December 2020. And I want to thank you for being with us here. It's been a great time. And we look forward to seeing you at the next one, at the next Afro-Asia FinTech Festival. We're also looking forward to seeing you at the next hackathon, where we'll be showcasing the very best fintechs and how they are filling in the gap and enabling financial inclusion. Thank you very much for the time you have had with us. Please remember to still log on to SFF. It continues up until the 11th. But for now, I want to, before handing it over to the President of the Republic of Kenya, I want to now hand it over for the closing remarks to the Governor of the Central Bank of Kenya, Dr. Patrick Njoroge.
Your Excellency Uhuru Kenyatta, President of the Republic of Kenya and Commander-in-Chief of the Kenya Defense Forces, moderators, speakers, panelists and partners, distinguished guests, ladies and gentlemen, good morning, good afternoon, good evening, wherever you are. I'm delighted to join you after 3 inspiring days of coming together to deliberate on the theme of people and talent, harnessing collaboration in pursuit of resilience and growth post-COVID-19. I'm privileged today to welcome His Excellency President Uhuru Kenyatta to the Afro-Asia FinTech Festival, Nairobi Online City, at the 2020 Singapore FinTech Festival. His Excellency's presence is testament to the high-level ownership of Kenya's digital transformation strategy to spur shared prosperity for Kenyans. Let me also take this opportunity to thank our hosts, moderators, speakers, and panelists who accepted our invitation to join us over the last 3 days. I'm grateful to our partners, service providers, and particularly to the Monetary Authority of Singapore for working with us on this journey. I'll be remiss if I did not acknowledge the teams at the Central Bank of Kenya who have worked tirelessly over the last few months to make this event a reality. Finally, we appreciate the hundreds of participants who joined the Nairobi Online City event to be part of the conversation over the last 3 days. These last 3 days have been truly inspiring as we have shared successes and challenges in building back better through the coronavirus pandemic. As I indicated in my opening remarks on Monday, 2020 has been an unprecedented year dominated by the COVID-19 pandemic. While the lives and livelihoods of citizens have been adversely affected, digitalization has kept the lights on in the global economy. As we begin to turn the corner, we will look to digitalization as we build back better. I did set the stage on Monday by highlighting 3 broad themes as we pursue global resilience and growth post-COVID-19. I was pleased to note robust discussions over the last 3 days around the themes of restoring small and medium enterprises, SMEs, partnerships and collaborations, and sustainable finance. First, it was inspiring to hear the successes of financial institutions in digitizing the operations of SMEs. This has indeed accelerated during the pandemic, as SMEs have pivoted their operations to adopt COVID-19 containment measures. To address the cash flow constraints that SMEs have faced due to COVID-19 restrictions, banks have restructured their loans to see them through these turbulent times. Equally inspiring is the move by financial institutions and technology players to build the skills of SMEs by automating and training them on financial management. It will take Finance Plus, which is access to finance and upskilling SMEs, to restore them to drive growth and resilience post-COVID-19. A lot more remains to be done in restoring SMEs, but the green shoots are sprouting and we need to nurture them carefully. Second, on partnerships and collaborations, the key message was the need for increased collaboration in building a sustainable financial ecosystem. This approach leverages on expertise, resources, and innovations from various players. Central to this is the building of the requisite infrastructure to connect our citizens to the digital realm. Significant resources and input will be required both from the public and private sectors to put together the requisite hardware and software for sustainable digital ecosystems. It was inspiring to hear from MAS on the global initiative to build foundational digital infrastructure, drawing on the experience of Singapore, India, and other global leaders. Collaborations such as this will enable countries learn from each other and fast-track the development of foundational infrastructure in their countries without reinventing the wheel. Third, on sustainable finance, the pandemic has brought home the interdependence of corporations and the communities they operate in. Together, corporations and communities have worked together to mitigate the adverse impact of the pandemic. Illuminating experiences were pointed out where banks and other entities worked with their customers through this period through restructuring of loans and continued provision of services through digital platforms. More encouraging as we build back better were cases where banks and other entities worked with manufacturers and SMEs to pivot their operations to the new normal. This was particularly pertinent in the move towards domestic manufacture of personal protective equipment, PPEs, which initially were sourced from overseas. As we build back better, sustainable finance will be imperative. In the long run, our vision at the central bank is that all finance will be green. We are working closely with the Kenyan banking sector, whose leaders share their experiences in this area. Green finance is particularly pertinent to Africa, that contributes the least to pollution globally, but bears the brunt of the adverse effects of climate change. As we build our digital ecosystems, we must keep in view effective digital governance frameworks. As data trails grow, we must protect our citizens from abuse of their data and ensure they are well informed on the use of their data. We must also beware of new trends. For instance, banks increasingly rely on artificial intelligence to make decisions on access to credit, particularly for SMEs. Rigorous evaluation produce biases that inadvertently exclude the very citizens we are trying to onboard to digital ecosystems. Dear friends, in closing, let me once again thank you all for the engagement, partnership, and collaboration as we build back better from COVID-19. Ladies and gentlemen, it's now my distinct honor and pleasure to invite His Excellency Uhuru Kenyatta, President of the Republic of Kenya and Commander-in-Chief Your Excellency.
Mr. Tharman Shanmugaratnam, Senior Minister and Coordinating Minister for Social Policies in Singapore and Chairman of the Monetary Authority of Singapore, all distinguished guests, ladies and gentlemen, it is my distinct pleasure to deliver a keynote speech at the 2020 iteration of the Afro-Asia FinTech Festival, which is being held as part of the global Singapore FinTech Festival. I'm grateful to you, Senior Minister Tharman, for your kind invitation and warm welcome. I also congratulate the organizers of this event for bringing together over 30 cities from across the world. And I note with satisfaction that our capital city, Nairobi, is represented here today. This indeed is a great honor for our country, and we look forward to sharing experiences and learning from each other, especially in terms of this year's theme, people and talent. I am encouraged to note that continued cooperation in fintech between Kenya and Singapore since I inaugurated in July 2019 the Afro-Asian FinTech Festival 2019, which was co-hosted by our central bank and the Monetary Authority of Singapore, and the tremendous progress that has been made since. The social and economic bonds of friendship and cooperation that tie Africa and Asia are more relevant today than ever before. As our world contends with the COVID-19 global pandemic, it is critical for our two regions and our people to come together to find ways to innovate and leverage adversity into opportunity within the context of a changed world. That approach must be people-centric and tailored towards maximizing the gains available from fintech and the digital economy. Ladies and gentlemen, Kenya recorded its first COVID-19 case on the 13th of March this year. My administration took immediate steps to safeguard the health and well-being of our people. And for the first time in our history, we introduced a nationwide curfew, restricted movements into and out of particular counties in our country, closed our international borders, and introduced restrictions on social gatherings. While these measures had demonstrable positive benefits, they inevitably had adverse impact on lives and livelihoods. But it has not been all doom and gloom. In the face of adversity, Kenya leveraged on the digital advantages that we had built over the decades to reduce the risk of COVID-19 transmission. Though physical notes and coins, we introduced emergency measures in March to encourage the use of mobile money. Specifically, our central bank, in consultation with commercial banks and payment service providers, waived charges on the low-value transactions of below $10 and all transfers between bank accounts and mobile money wallets. And further, mobile money wallet limits were increased from a previous $1,500 to US dollars 3,000. These measures have played a critical role during the pandemic in facilitating official and personal transfers to vulnerable households. They have also enabled individuals and businesses to access financial services amidst the necessary restrictions imposed to contain COVID-19. In addition, it is indeed a remarkable and exciting story to tell for an additional 2.7 million Kenyans, or 10% of the existing subscriber base, have been onboarded to mobile money during this pandemic period. Ladies and gentlemen, the war against COVID-19 remains far from being won. However, there is light at the end of the tunnel, especially with recent announcements on the potential vaccines against the novel coronavirus. And as we begin to build back our economies and our societies, technology, innovation, and the financial sector will be at the center of our bounce-back strategies. As we build back the lives and livelihoods of our citizens, three pillars will be critical in this journey. First, we shall place people at the center of the digital economy. The vision of Kenya's digital economy blueprint, launched in March of 2019, is a digitally empowered citizenry living in a digitally enabled society. We aspire for Kenya, where all and every citizen, every enterprise and organization has digital access and the capacity to participate and thrive in the digital economy. And towards this end, my government has, working in partnership with the private sector, developed bespoke platforms and applications that innovatively deliver services in a consistent and convenient manner. Second, as we digitize, we must be careful not to leave any of our people behind. While digitization has been a lifesaver both before and during this pandemic, it has also exacerbated the digital divide among a vast population who lacks access to digital platforms and those who do. Over 700 million people globally lack broadband connectivity, while over 1 billion lack the formal identification documents necessary for safe and secure digital transactions. To ensure our people are not left behind, my government has supported a multifaceted program to expand connectivity in Kenya. We have also introduced the National Integrated Identity Management System, which seeks to create and manage a central master population database, which will be a single source of truth on a person's identity. Third, while connecting citizens to the digital economy, we must remain seized of the attendant risks, and particularly with regard to data privacy and cybersecurity. As we connect more citizens to the digital rails, we must remain cognizant of the fact that many of them are not techno-savvy and can easily fall victim to loss or misuse of their data and personal information, or are vulnerable to online fraud. In this regard, Kenya enacted the Data Protection Act of 2019 to protect personal data and ensure that it is used only for legitimate purposes. To oversee the implementation of the Act, Parliament in November of this year approved the appointment of Kenya's first Data Protection Commissioner. On the cybersecurity front, we are in the process of operationalizing the Computer Misuse and Cybercrimes Act 2018. The Act provides a framework to proactively detect and deter cybercrimes and misuse of computer systems through a framework that includes international cooperation in recognition of the increasingly transnational nature of cybercrime. Ladies and gentlemen, Kenya's financial transformation journey has seen access to financial services triple in 13 years, from 26% of the adult population in 2006 to 83% of our population in 2019. The mobile money phenomena that gave rise to this transformation was initially largely driven by Kenyans in urban areas, transferring money to their relatives in rural areas. Over time, these needs have morphed to include savings, credit, insurance, pensions, and even capital market products. Users have also expanded, with many Kenyan citizens in the diaspora utilizing mobile money as a means of cheaply and conveniently remitting money back home. As government, we introduced Emakiba, the mobile phone-centric bond, to finance government in 2017. For as little as $30, Kenyans can participate in government securities and contribute to the financing of critical social services such as health, security, and education. We are reviewing the Emakiba bond that matured early this year to learn more from our experiences. Going forward, instruments such as Emakiba will be critical in placing people at the center of the financial system and to participate in the funding of services that are critical to the lives of our people and the livelihoods of our communities. In this context, my government will continue to provide an enabling environment for financial institutions and innovators to develop products to meet our people's needs. Ladies and gentlemen, while global fintech festivals such as the Singapore FinTech Festival allow for the sharing of experiences and learning, their success should be measured by the quality of ideas they incubate and bring to fruition. I'm therefore pleased to note that the Singapore FinTech Festival also incorporates a global fintech accelerator that seeks to create and match impactful, market-ready solutions with real industry technology, needs focused on the COVID-19 response, green finance, and sustainability. I am also pleased to note that one of the global finalists, SME Credit Pro from Cameroon, was the winner of the 2020 African Virtual Africa Hackathon, organized by the Central Bank of Kenya in August of this year. The 2020 Africa Virtual Africa Hackathon focused on solutions targeting the twin health and economic challenges posed by COVID-19. 74 entries were received from 14 countries across Africa and the Middle East, as well as Europe. There was an impressive array of innovative solutions in healthcare, digital payments, economic recovery, and general categories. The solutions presented targeted the health and economic dimensions of the pandemic. This include financing of micro, small, and medium enterprises, cash transfers to vulnerable groups, enhancing agriculture value chains, and COVID-19 contact tracing. These solutions, when scaled up, will play an important role not only in the context of the pandemic, but also in contributing to the implementation of the Sustainable Development Goals. The ongoing pandemic has been a setback in the implementation of the Sustainable Development Goals, particularly in health and education. Innovation will be critical as we regroup the lost ground in achieving the SDGs. I therefore wish all the 20 global finalists well as they pitch their solutions at the Singapore FinTech Festival, and more importantly, I look forward to their solutions being scaled up and being part of the global agenda to build back better. In closing, I look forward to the innovative ideas from the festival, the partnerships that will be created between private sector and government. A reservoir of ideas and ingenuity lies in this forum, which, if implemented, will dramatically change the world for the better. I thank you all for your attention.
Good morning, Janet.
Wow! And you are?
I'm Casey. Now help you with anything to do with your KCB bank account. Pay bills, transfers, statements.
You're hired.
I'm your internet banking security ninja. I'm your 24/7 personal assistant.
Super.
So, we can always talk about your account, online, whenever you like. Need a ride?
Let's go.
Alrighty. With you anywhere, anytime.
Register at your nearest branch for KCB Internet Banking today.
My name is Fena Auma. I am 12 years old. I live in a village near Mombasa in Kenya with my mother, father, and my brother Michael. But my sister lives in another city for school with my grandma. They are far, far away. Sometimes I feel alone. I love them and I miss them. Everybody is talking about the new train in town. I can't wait to take it with my family to see Grandma and my sister. In Kenya, we never give up, even when life is hard sometimes. We always remember to take care of other people, to say to each other, Hakuna Matata. One day, I want to find a good job to help my family and other people who need me. Every year, there are thousands of wildlife traveling from one place to another, passing through some dangerous challenges. But thousands of new lives are born on their journey. Just like these wildlife, we travel for a better life as well. It's a great journey indeed.
The first action we took was to make sure that our staff are safe. So in terms of providing them with sanitizers, providing them with masks, providing them with the right information so that they can rely on facts, so that they can take care of themselves, and secondly, they can take care of their families as well. Whether you have a mortgage or a personal loan or credit card debt that you feel something has dramatically changed, we could extend 3 months repayment holiday, or 6 months, or 12 months interest-free, or we restructure the loan. And that is both for the individual customers and the business clients. And during a time like this, it's everybody coming together. And so we looked at our repayment terms, our payment terms, and we reviewed them from 30, 60 days to immediately we get an NPU, and within 7 days, we make the payment.
We partnered with partners like the Red Cross, Kenya's KCDF, and we spent over 150 million shillings reaching out to the wider community, seeing how we can make a difference in this pandemic. Because as we believe, it's something we're going to live with. And as Standard Chartered, it's very important to say, what does the new normal look like? How do we protect our staff? How do we continue partnering with our clients? And how do we help the communities?